Good morning. How's everyone doing? Barely slept. Slept okay. Vupsong incoming? Not yet, but it's interesting that we're holding this high into the pre-market. Arbitrage is out of control right now. Um, that could lead to more upside. I think we get rug pulled at market open. I mean, we could get rug pulled at market open. But like I said, arbitrage is seriously skewed. So I would say if we do get rug pulled at market open, it's not going to last long. Sure, share offering here. We'll see. At least, probably not during market hours. Is this no pex? No. Can you explain arbitrage comparing the price versus indexes? No, comparing the price versus its price on other indexes. So GME versus GME and other indexes. Ditching your protected puts it open or seeing if JPOW crashes the market. I'm definitely going to wait and see if JPOW crashes the market. Ding ding. Mhm. Switch this over to SPX. Okay, so SPX still holding roughly around 4,000. Some stability there. Yeah, futures are doing. Um, hmm. Futures are looking okay. Small slip at open. GME arbitrage starting to resolve, but massively in the opposite direction. Huge volume at open. This looks like it's going to turn around. Yes. Yeah, it's going to bounce here. Okay. All right, futures are finding some support. Looks like 40 at 40.30, which was a resistance yesterday. So we'll see if it acts as a support this morning. Futures bounce is good for GME right now because it'll pressure the covering. Go down to the 5-minute here and do that. Okay, so arbitrage resolved to the upside, but quite a bit over. Interesting. So we are trading over Gamma Max right now. Gamma Max at 23.73, I believe. Big red on VIX. Yeah, VIX is down a bit this morning. I mean, it's not huge, but it's under 20. GME back to 23. We may pull back down to Gamma Max as longs reposition. So, I mean, be prepared for that. Slip below Gamma Max is obviously bad. We don't have a lot of support right under that. I guess 22.50. Let's see here. Where the fuck is delta neutral? Delta neutral's at about, yeah, that's not great. The delta neutral's at like 16. Although I'm sure it's moved up since yesterday. We could figure out where the gamma flip point is for this morning. Yeah, gamma flip's still down at like $16. Call volume's coming in like fucking crazy though. It's kind of like I said last night, if longs are able to reposition before this falls too far, it can absolutely rock it. put the Greeks up on the screen? Yeah. The Greeks are going to be kind of irrelevant today because they're from yesterday's close. So they're not factoring in like the after hours movement. So almost back at Gamma Max. I haven't seen volume like this in ages. They were borrowing a whole lot, weren't they? Good thing cost to borrow is up. I mean, most of this is probably calls selling, right? At market open. And then if those reposition, Gamma Max can then move up, right? Video skyrocketing on no news. That's always fun. Call selling at market up. This is more like crime. Nope, it's largely just call selling. People had a lot of weeklies going into last night. They're gonna, close them, especially institutions. Although call buying is picking up quite a lot. Nothing very far dated, unfortunately. Volume's starting to die down a bit here. Still up 35% above yesterday's close. We want the call selling to stop before it drops too far. That way the short calls that are open on the chain have to capitulate. FSLR probably a better short than Nvidia. Well, waiting for the Fed first. Yeah, I wouldn't get any Nvidia puts until the Fed meeting or the decision. And actually Powell's speech, right? I sold some April's cash money rich pickles. Fuck yeah, man. That's awesome. There's gonna be a lot of super stock in here, stockers in here. Almost 2K people. Whatever. I like that it's flattening out so quickly and holding. It's not flattening out yet. It's still dropping. Okay, we're just under Gamma Max now. And at resistance. Any sign of OPEX covering given the volume? I mean, some of this could be OPEX covering. I don't think there's any real way to specifically differentiate between the two at this point. GME is getting more liquid, so yeah. Although they are fighting back against that. not very successfully. We need Green Daddy patience. Someone calls it foreclosed yesterday. Sad and hate bought weekly puts. I'm 90% already ready to close. Nice. Can you please say some hateful things about DRS or puppies to get the super stalkers mad enough to leave? They'll leave all on their own. You sound like a surgeon during a life-threatening procedure. We're entering the brain canal, now severing the medulla oblongata. I don't think that's how that's spelled. Whatever. And I have a bunch of weeklies. How did that happen? It must be a glitch. It kind of doesn't sound like one. How'd your downside hedge go last night? I mean, pretty good considering the IV doubled. Thanks for asking. Is NVIDIA a market-wide joke at this point? I think so. What are your thoughts on IWM right now? It's down about 85 points this morning. I closed my IWM position yesterday. Um, it looks like the shorts have largely repositioned since last Friday. I mean, if the Fed meeting's positive, it might have more upside again today. But in the meantime, I think it's going to stay relatively stable. I think the indexes will as well. Do you use market orders to sell to close your calls or a limit? If I'm just selling them, a limit. If I'm using a stop, it depends on the volatility and the underlying. If something's really volatile, like SPX or GME, then I'll usually use like a market, like a stop order at market. Sometimes I'll use a stop limit if volume's not too high. Is going long on GME now just FOMO? No. I mean, there's a significant amount of market maker exposure that was created overnight. If we hold these levels near gamma max and longs reposition driving gamma max further up, then the market maker will continue buying into the rising prices until we cross whatever price gamma max ends up at to the upside. So it's not, but patience is definitely mm, definitely something you want to have right now. You don't want to just rush into everything. That's on selling upstart CCs end of day. Yeah, I mean after a Fed decision comes in. If the Fed pivots or goes flat, that's like really good for upstart's business model, right? I don't always show up for stream, but when I do, I sell the fuck out of cover calls. What's up, Azer? Do you think it's safe to say Upstart is not going to run this OPEX? Not yet, no. It got really illiquid this morning. They got a shitload of liquidity in the pre-market, so um maybe it will. It could be they're waiting on the Fed decision before covering anything. Um because if they pause rates, credit markets are going to stabilize and shorts are going to want to get out of Upstart. Wall Street, Nvidia, 300. Pay me for my wedding guy. Looks like he's going to be all right. I don't know. Nvidia Gamma Max is like basically what it just hit. So what kind of price action can we see with T plus 2 And this volume, assuming they don't get us back to spot, um, that'll depend on how much Gamma Max goes up. So, how many calls people buy, how many out of the money calls people buy, and if those calls have theta or they don't. So we don't know yet. We'll have a better grasp of it by tonight. Did Jimmy just hold? Well, a little bit. Yeah. Your magic line worked. Do it again, but higher. Welcome to Long Johnson, Black Pine. Thank you so much, man. Any reliable predictions for Jimmy's price range in April? No. Not right now. Not until all this was resolved. How are my long-term CCs? I sold some in February for out in April, so I don't have to worry. They're above my cost basis. And I sold them at 42. Buy back now or wait? Um, IV's up a little bit right now, but price is down, so is it a good opportunity for you to buy them back? I don't know if you're up on them or how much you're up on them. I'd assume that you're up, but I don't know how much. Sold the puts already on that test of Gamma Max. I'm gonna wait until the Fed decision to reposition on anything else. Thank you for all you do. Feel so much better missing the after hours movement now. Nice, man. Adopted by the dance. Thank you so much. Welcome to Cornishon, guys. Hit me up. Oh, you don't need to. Just welcome aboard. Give Adopted by Dan's a shout out for hooking you up. Some of the questions here make me believe people want to see your downfall. Unless they have CDSs on the pickle jar or puts on you, I really don't understand why they want it. Want what? Am I missing the questions? I wanted to sell CC for 24, but accidentally bought 24C, 324 instead. Just curious, why didn't you sell your Jamie weeklies? Are you that confident in another push up this week? I sold most of them. I sold 150 out of 170 of them. So the majority of my weeklies I sold. I mean, they're in the money. It's not like I'm losing a ton of theta on them or anything. I have stops. Don't worry. I took some profits. I'm not a fucking idiot. It's crazy how at market open I was up 40k plus, and after sold half my call position on GME, now it's already from 40k to 25k. Do you think they could wait until FOMC to cover more? Possibly, yeah. Too soon for GME cover calls? Yes. Yes, it is. There's still a lot of volatility on the table. I mean, you could. You'd probably want them further dated though, if you did, in order to lower your chances of assignment. And something about cover calls that we need to be aware of now is that the floor is no longer the same, right? There's fundamental changes in GameStop's evaluation. You know, we were very safe selling covered calls for a long time, kind of wherever the fuck we wanted, because no institution was going to buy GameStop above like $7 to $12, right? That's changed. And we don't really know yet where institutions are willing to buy it, but I would say they'd probably be more willing, 15, 18, 20 than they were before. I love this rush. You the bomb. Nice, dude. Congratulations. Gherk, thanks for all you do. It's a big deal. I'm finally getting better at taking profits. Port's up 150% after selling my calls this morning. Excited to keep growing with you. Thanks, Chuck. Congratulations, man. NVIDIA 500, not a meme. I think NVIDIA has actually broken Gamma Max now. If it hasn't, it's got to be really fucking close. Gamma Max is 275 today. And Gamma Max went up a bunch. Still moving. When to buy more puts? Hmm. If indices bounce here, that would be good. Futures look like they're getting a little positive price improvement. Maybe finding some support at 40.30. Two things. How is XRT liquidity? It's getting slightly better. We have evidence RC knows about the cycles given some of his buy-ins. I think he did a positive EPS during Tuesday OPEX on purpose. That's possible. Ooh, Upstart's fucking ripping. Cool. Woo, I made 40K today. Nice, man. Closed my long-term CSVs for 10K, 30K in calls. Now I opened some CCs deep in the money for May. At the top to hedge the downside. Some bear call spreads too. Nice, dude. I'd be careful with that. GME can bounce. At least the spreads. How come the stream card doesn't say how to touch tips with Kendro? I thought we had something. Man, I touch tips with a lot of people, Kendro. You can't tie me down like that. Any changes to your thoughts on Docu prior PT? I was looking for 40-45 to go long. I mean that's still like my DCA range on Docu. Um, I don't really have any changes in my price target. I mean, if the market slips again today, it could get pretty close to that. But yeah, I mean, I'm not really in a rush to buy more shares right now either. But yeah, my target range for buy-ins on it is 40.06 to 45.40. So unless it's down there, I'm probably not buying any. 550% gains on my 1875 Cs I bought last Thursday. Nice, dude. Thanks for all you do. It's a big deal. Thanks, man. Saw that one already. AMD is also MOASsing. My puts are now 6 feet under. Yeah, it looks like the whole chip sector is rocketing. Seacraft, thank you so much, dude. Guys, welcome to Cornishon. Give Seacraft and a big shout out for hooking you guys up. Thank you so much, man. Desjar, what price do you think we need to hold to see a T+2 bounce? I'd like to hold right here, just at above gamma max. That's kind of where we held in March, after the initial run up last year. So, um, this would be a good range to hold. Definitely above 2250, would be ideal. Is this all OPEX or some of it due to earnings? I mean, some of it's due to earnings, but some of it's also OPEX. I mean, like we're getting a liquidity realization, so it's I would say it's driven by both. I sold a few 421 25Cs, not my whole port, but enough to make me a little nervous. Institutions probably won't want it that high, right? We don't know yet. I would wait and see how the Greeks shake out, but I mean if you want to sell CCs, I mean no one can stop you. Isn't 15 to 18 a more likely price range for institutions than the 18 to 23 you wrote yesterday night? 100% rise in value seems like a lot for 1/4 of positive EPS. I mean, but are they going to trade it at a multiple of forward earnings? You have to consider the multiplicative factor of GME having positive EPS now. How is it going to be valued? Right. You're the sharpest floating face I've ever seen. How much of your SPX puts have you bought back into? Percent wise is fine. Mostly interested in the amount of longer theta puts you got. Thanks. I don't have any puts left. I had some puts. I closed them when we tested Gamma Max here. Is it weird there's no 10Q posted yet? 10K, no, it's not that strange. Hey Dad, I made a cool 1K this morning. I love you, and we hope we can cuddle by the fireplace again soon. Thanks, Sean Daniels, rehypothecated pigeon whale. Congrats, man. What's the best way to exit my GME May 15p hedge? Are you up on it right now? I have a gold $20 call for April 21st, down 50%. Hold for a market dump. I'm assuming gold should go up again if the market reacts negatively to JPOW. I couldn't sell it sooner because PDT. Ugh. Uh, PDT is the worst. Yeah, I would wait to see what JPOW says before cutting anything. Can you explain that chart you sent and the announcements one more time? If you had already, I'll clip it for the pickle jar. What, the CVV WAP? Oh, fucking foreign market arbitrage on GME got blown out hard this morning. Harder than it has since January of 2021. SPX puts rather than GME puts, or did SPX test Gamma Max? But SPX is nowhere near fucking Gamma Max, man. Uh, do you not have any SPX bets? I would hedge the downside because we don't know what the fuck Powell's gonna say. If FOMC goes with 0.25, we wait till JPOW for positioning 0.00. We sell puts almost immediately, and 0.5, we full port puts instantly. I mean, yeah, probably. Although zero has, I think zero has some like other connotations that the market probably won't factor in immediately. But if Powell moves forward with a pause, that indicates to the rest of the world that the U.S.'s banking problem is very serious, more serious than our already relatively high inflation. So it's it's definitely something to consider. Stabilizing at GM good? Yes, because we're stabilizing above the put and short call interest. And what we want to see is we want to see those capitulate. And the capitulation of those not only will drive gamma max higher, but it can also uh lead to more upside. Is this the chat for 6 foot fellows? Still rocking the hat, I see. How many shares of game you own now? You gotta be close to filing with the SEC, am I right? I mean, I haven't really increased my total shareholding that much since we last talked to Dr. K. Um, but I still have a lot. Nowhere near filing with the SEC. How you doing, man? You still making your family those fucking disgusting hamburger pies? Still playing with my original $100 that I mentioned last milestone chat. It's up 2.5k now, thanks to everything I've learned from you. Big ups, Pickle, praise Zubop, Riku. Thanks, Vesture. Congratulations, dude. Pickle, I made money today since I've learned from you to protect my capital. I'm using the free super chat. Sorry. Thanks, DJ Lamb. Congrats, dude. If the huge April 25 POI closes, that would be glorious. It would be. What would Jimmy's book value be now? Ooh, I'd have to do the math. Well, maybe I don't. Yeah, I'd have to do the math. Fucking. That's a 1.32 billion divided by 1.32 billion divided by the total shares outstanding. What's the fucking 304 million, something like that? 304.58. Mm. $430-ish. $4.33. Prike, welcome to Cornichon, man. Thank you so much. Johnny Utah FBI. It took big profits at market open today and repositioned. Thanks, Gurk. It continues to be a fun educational ride. Deploy capital, make white. Congratulations, man. That's fucking awesome. Jimmy flat, volume dying off hard. Yep. What's the options chain doing for Jimmy? Calls still pouring in. If so, what's keeping the price this stable? Calls selling off. Let me check. Weekly's coming in. Lots of put volume at 20. Coming in 22, 21, 23. Call volume coming into the upside, but not a ton for this Friday. Although call volume looks good for next Friday. And 421, okay. Some call volume coming in for 421, although some of it may still be just sold. There's also some put volume coming in at 25, 27.50, and 30 for 421 as well. $406, mostly call favored. 414, pretty much all calls. May, pretty much all calls. So, yeah, calls are coming in. I don't know how many of them are sold versus, you know, like the May ones look to be sold. Probably an attempt to drive IV down. Let's see. $3.5 million Knave Gex. 25 kind of seems to be the line in the sand there. I think we've got enough that we're probably going to see a move on T+2, if not sooner. Again, stabilizing here near the sold call volume is very good, right? Because it can force capitulation, especially on the naked calls from volatility sellers. Tesla dead? It should still be doing okay. No, a little bit down today. Did it get rejected at 200? Yeah, 200 was kind of the upside test for it. I don't know if it'll go much higher. Maybe if the Fed decision's positive, but otherwise, I think it might be about done running. Do you mean inversing SPX? I mean, it's just not tracking with it at all. Curious to compare the US banks or cash deposits. We have here in the EU an 8% annual interest rate. It's nowhere near that high. Maybe some banks are offering like 3 or 4 here for a savings. Would a good range for a strangle on JPass speech still be 39.80 or 40.30? Or wait for more options positioning later in the day? I mean, we're trading basically flat at 4,000. So yeah. Uh, I would say 39.80, 40.20, since most of the calls at 40.30 seem to be sold, Colin, is probably a better range. Netflix Red Day. Yeah, a little bit. Shut up, turd. Look at this tasty FTDs being created by Gorik. Is JPEG going to cut rates due to the systemic risk presented by GameStop having positive EPS? I highly doubt it. T+2 obligations come in. That would mean a small run on Friday. Something like running to Gamma Max. Well, whatever Gamma Max ends up being, right? That's kind of the cool part about OPEX is that like on this pullback where we trade below Gamma Max can move up. And so then when the T+2 price action comes in, we can move higher. That's what happened in March, right? Like here I'll show you guys. I'll show you on the 4 hour. Yeah. Also liquidity is not pulling back, which is a good sign. So if we go out here back in March, you know, we ran right up into what Gamma Max was at the time, which was like 158. And then we pulled back over the course of like the next day. But we still stayed relatively high, which forced the capitulation of any puts or short calls in this range, right? And that also, forces the market maker to begin hedging gamma in T+2. And so, T+2 from there, which would have been, right here, we see volume come back in and we pushed higher. We actually in March we actually had 3, right? So we had this one, this one, this one. Gamma Max stayed relatively flat at like 198 through this period. So it didn't really go up anymore. Eventually Gamma Max gets like its potential to keep rising drops because calls get so expensive that people just can't afford them anymore. Is this updated yet? I think it's still missing the data from the 10K. But liquidity still looks really good. Liquidity is still rising. So as long as the momentum of that keeps going, we can still go, a lot further. Even if we just hit like the same amount of liquidity we saw back in August, we've still got some decent range to the upside. Like XRT is still pretty illiquid compared to its usual high. You know, IJH still has a ways to go. So I think there's definitely still potential for another push up. And then don't forget, if it starts moving up again, people are gonna want to FOMO in even more. $40.65 is still a pretty hard cap on the upside until end of the month and a collar roll, right? I mean, the collar can just roll up, right? It's not as strong of a cap as it used to be as it nears expiration. Why aren't they buying my shares at a $1,000 limit price? Well, because they're worth $24.35, Kendra. I saw that wheat reached a 52-week low today. High crop yields expected this year, or a decent opportunity to start DCAing. Wheat's expected to stay pretty cheap this year. Yeah, crop yields are very high. Kind of the opposite situation we had with the drought last year. And most of the global supply chain has reorganized itself to better handle the, lack of exports from Ukraine. Well, today would be T. And then +2 would be Friday. Friday, Monday. Did you get the longer dated Nvidia yet? I haven't bought any Nvidia puts yet. I'm not going to until after the Fed meeting. Jimmy breaking 25 here would be a very good sign. No thanks, Dr. K. Holding 24 mean anything for yesterday's Gamma Max? I mean, we fell below yesterday's Gamma Max here, at our like the peak of our drop today. But then Gamma Max has the opportunity to move up, right? So we don't know what Gamma Max is in real time because they don't report OI in real time. So the next update we'll have, so the Gamma Max we have right now is lagging, and the next update we'll have is tomorrow. Or well, tonight, late tonight, but tonight. Only 622 likes and 1.8k people in here. Like the stream, people. Thanks, Wessels Pretzels. I appreciate it, man. I sold half my CCs for April before you said it was too early for CCs. Waiting to see what happens for the other half. Well, at least you didn't sell them all at once. Wouldn't with Nvidia pushing 270, wouldn't a more appropriate price for Gmail be somewhere in the range of $15,000 a share? At what price would you start to be cautious of a possible share offering? I don't think we need to worry about that right now. SPX gonna settle 40, 20, 40, 30 to mess with everyone who entered straddles this morning and yesterday? I mean, if it does, you can always reposition your straddle before the meeting, right? But I mean, 40-20 is within my expected range. I'd actually prefer it to settle at 40-20, and then there's a rate increase, and I can close my calls profitably and wait for prices to drop, right? That's, I mean, if it settles to the upside of the straddle and, you know, it's gonna move down, that's fucking awesome. I think Jamie holds these levels 2 weeks out. Seems like it's just a perfect storm. Good earnings, market pushing up. Probably not. And we already broke Gamma Max, but we broke it in after hours, so we'll see how that affects things. If we break Gamma Max again, I highly doubt prices will stay stable. Got 70% of my OPEX position before close yesterday. Still made 15K. Jesus fucking Christ, Pickle Man, give me more. $5 in the money CC for a month out considered safe, not too deep, right? I mean, I wouldn't, like I said, I would try to be patient. You have plenty of time to sell covered calls. Chances of assignment right now with liquidity still relatively low are pretty high. Stewie, welcome to Dillionaire. Thank you so much, man. Hit me up in the Discord. I'll get you hooked up after the stream, man.
Yeah. Yeah, we might have a chance, but we ain't got rolls. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes gherkin to go. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies while I'm selling CCs like another fucking moon win. Praise be to RC and
the video puts are expensive right now. Are they?
Got the van GG on the CNBC saying that he ain't seeing no collusion.
Sure about that?
Might be apes, but we ain't that Joe. Motherfucker, trade this pop.
Jimmy Straddle sold? I'm kind of a big deal now. Nice, man.
Yo, but we ain't no cult.
G has plenty of cash they aren't currently deploying. There's no real need for a share offering until they have something to spend money on. Yeah, I agree. They need some kind of guidance, right? You can't. They're gonna have a hard time arguing the case with 1 quarter of positive earnings for a second dilution, and the C-suite would be probably pretty unhappy, given they just turned around near-term profitability, right? Don't forget that none of those guys have been paid in 2 years. If J-Bow comes in at 0.25 and a hawkish speech, would you buy a longer-term puts today? Yeah. Could running Gamma Max after hours have been a strategic decision? I mean, most of those after hours runs you see on earnings are market makers de-risking. That's why you'll see the price move really fast on very little volume, like right out of the gate. And then once the volume actually comes in during the earnings call and stuff, price remains relatively stagnant. So the market maker likely de-risked with the announcement of positive EPS, right? And then so going into this morning, they should be relatively neutral. I turned 500 bucks into a GR Corolla. Cheers and re. Nice, dude. Congratulations. Cat Bull, por favor. Thanks, Gurg. Made 250% on calls. Fuck yeah, Bilbo bag holder. Congratulations, dude. At some point, someone is going to sell the video after almost 100% run from January. Yeah, probably when they realize it's actually not worth anything. NASDAQ back to Feb levels. Still pretty far from that, right? How much is NQ up today? Getting fucking close. Jesus. I don't see how the Fed doesn't do something here to stomp out this speculation. This shit's crazy. They'll never kill inflation if they don't tackle it aggressively. Point 0.25. I think 0.25 is going to heavily depend on what Powell comes out and says in his follow-up speech. You know, if he's dovish and is going to take, like, you know, a soft hand moving forward until bank liquidity stabilizes, then that's going to be really bullish. If he's, you know, 0.25, but extremely hawkish, that's going to be bearish. Either way, I think 0.25 is going to limit range both to the up and downside. It's gonna, you know, maintain fear of future rate increases and liquidity problems. So you know, it'll probably stabilize markets more than anything else, but I don't think it'll be sufficient to curb the current climb in inflation. And so we could see inflation move even higher, which could force a more drastic response from the Fed by the next meeting. Also, we're moving towards Q1 earnings, which are probably not going to be good, even with the layoffs. So, you know, unemployment slowly in the background driving higher. Market's pushing higher still. Hopefully that forces GME up more. Back above that $25. We really want to break 25. So we can see some momentum here. Tripled my port this morning, repositioned, ready for T+2. Nice, dude. Congratulations. Yesterday after earnings again to Wall Street bets for a Jimmy talk thing. Listen to SS Briz talking about DRS, this, shorts are out of money, etc. Big cringe. Gross. Tripled my port this morning, repositioned, ready for T+2. Sell CCs when you decide it's right for you to sell CCs. It's your portfolio. Yeah. Don't ask me, because I don't care about your cover calls. Pi-Fi, I did something weird. I closed out my weeklies at 400% profit, repositioned further out. This is not the 510 gang way, isn't it? That's some Jimmy 421. 20s go in the money. Okay. Took profit, moved to 616, 25, 30s to see where this run takes us. Thanks for all you do. No problem, man. Congratulations. I used $600 I made from selling Fubo cover calls to make 4K on GME calls today. Thanks, Girk. Nice, dude. Congratulations. Oh man, I forgot. I bought a bunch of Aprils in my Roth yesterday. Dope. $5,500 tax free. You briny motherfucker. Sounds like everyone did pretty decent today. That's awesome. Any thoughts on why Express pumped? Did they? Not really. Up like 1%. Who gives a shit? It's a penny. That's not a pump. That's like when Bobby Holder's fucking stock goes up like 20% or a nickel. And they're like, ah, this is MOASS. Cohen's coming to save us. I'm stuck in the trenches battling the AI pump machine, and they're cranking too many soft goods for me to handle. I need JPOW to drop the nuke and end this. Just be patient. It's like literally the most popular stock in the market right now. If you want to short it, you're gonna have to be patient. Made decent money on GME calls, bought stocks on the dip, so I still have exposure, but with no theta decay or IV malarkey. Am I doing this right? Seems decent. I know, especially if the stock you bought on the dip was below your cost basis. It's just like a win-win, right? Took profits this morning, repositioned to cover any additional upside. Banking the rest of the next play. I think I'm developing some wrinkles thanks to the help. You got it, man. Congratulations. Now that GME has solid fundamental, is sub 20 a thing of the past? Not necessarily. Hey Greg, I'm going on vacation, so I'll have to miss some streams. I need you to make a mental note each day of how immensely ruggedly handsome you are since I can't. Thank you, Baradactyl. To be fair, express pumping is going up like 5 cents. Yeah, I wouldn't consider that a pump. Express after hours yesterday would jam me up to 95 cents. Nice. Took profits, re-entered with only my original capital. Have I finally broke my degen habits? I don't know, maybe. GME breaking 25. 25.50 is the next resistance. Interesting. 2680 is yesterday's delta neutral plus 15%. Nvidia P higher than GME even after this move. I know, it's fucking ridiculous. How are they going to keep Nvidia up after Q1 earnings? It's a good question. Gurk, others may think you're handsome, but always remember the pickles that help you make white, like Kendro. Pretty much Kendro. Thanks, Joe Rowe. Is Credit Suisse dead? I mean, they're bought out. Secured the bag, 3K. If you're keeping track, that's 3,200 in March. Exiting like a trader over here. I got my cash position and ready to get back in if JPOW decides to spank the bankers and tank the market. Fuck yeah, regards, Kiki. Congratulations. That's awesome. Little by little, you'll build it up. Well done. All I have in NVIDIA calls the past 2 weeks. I've been in NVIDIA calls the past 2 weeks. I closed mine yesterday, which kind of sucks now. But they were weeklies. I didn't want to risk holding them overnight into the Fed meeting. But I'm going to use the money from them to reposition my puts. I picked up like, I think it was like 67,000 on them. So I'll use that to average down the Mays and probably buy some more like April's nearer the money. Quarter 1 earnings season should start around like mid-May. Do you know how long it normally takes for Jimmy to file the 10K? I mean, usually it's out the same day. You get price targets to those songs? I mean, we've got to break our intraday high before I play anything. So 27. Looking good. Starting to pick up some of that hedge and moving up. Currently don't have a position on SBS. Think I pick up end of June put before meeting. Bad idea not to wait until after. Probably. I mean, listen, the thing about this meeting is it's going to have a lot of potential range. So if you're patient, you should have plenty of time to position into long dated shit, right? If it's going to go up, there's going to be plenty of time for it to realize that upside. There's plenty of range to the upside to be realized. You know, if he pauses rates and has a dovish outlook, you know, we could see 4,200 in a couple weeks, right? Same for the downside. You know, there's no reason to rush it, get burned on buying into a position too early, right? Especially when the outcome is so binary. Like, and we're gonna have a pretty good idea of where the market's gonna go based on the decision and what he says, right? Hey Greg, I want to pick up options as a strategic investor. Do I get the 5th edition study guide? You don't want the study guide. The study guide doesn't have any of the information in it. I mean, you can get the study guide in addition to the book if you want to. What copy do I have? I think I have the 5th edition. Is that the newest one? I had to replace my old one because the covers fell off. Nvidia and QQQ puts are my hedge. That's not bad. People speculating about the 10K stuff. I hope they laid off some of their IR and are just understaffed. Would be the funniest reality. I mean, hopefully the earnings are positive due to layoffs, right? And not something else. Can you hold up the book on screen so I can see how thick it is? Well, I don't want to injure my arm right now. I need it for trading. I sold my adult calls at 35% gain yesterday and then sold weeklies at almost 16x on market open. Nice, man. Okay, so if the market bounces here and we move up to test 4020, that should give Jamie a little bit of active fund pressure. Let me see how liquidity's looking. Man, they didn't get fucking any liquidity in pre-market today at all, which is kind of awesome. Like if you look at, I mean, Jesus, if you look at literally every day on GME going back, I'll go out to like the 30-minute. It's harder to see there. 15-minute. Today is the lowest amount of liquidity obtained in a morning trading session since January 25th. It may be the lowest amount of liquidity traded obtained in a morning session in the last year. I guess like August 19th was kind of close. That was pretty low. Maybe like right before the May OPEX. Those are like 0.23, and today was 0.02. So 10 sigma difference. Yeah, today's really, they really didn't get any fucking liquidity at all. We're below our average baseline right now. So some shorts are definitely fucked. That doesn't mean MOASS. Don't here's my problem with chasing the MOASS dream, right? Like GME can see more price improvement, absolutely. But when people chase the MOASS dream, they hold and they watch their money appear and disappear, and Kenny keeps it all. Because remember, when you hold through that upside, and then Kenny sells naked calls, he keeps all your money. So he robs all the potential out of the stock. So, you know, selling cover calls and taking profits is just taking your fair share. Little stop loss hunt there. Haven't seen one of those on Jimmy in a while. Did you make 4 mil like your options chat prediction yesterday? No, not quite. But I haven't closed it all yet. Too many contracts closed there. See if we find support. Let's see if ES is going to bounce and help us out here. Looks like it. Looks like ES is getting ready to move up and retest 40-50. So hopefully that helps us turn around this stop loss hunt on GME. Doesn't look like a lot of people are getting stopped out. Like the April 25 only saw like 50 contracts sell off, so not very significant. This contract's probably a lot more volatile. Yeah. The weekly 30. There's a lot of skittish buyers on that one. Fix at 2033. Futures at resistance. Is that gonna bounce or sell off? One of those things is probably gonna happen. Joke's on them. I didn't set any stops. They got me. Happens. When do you expect the gap to 20 to be filled? What, gap to 20? There's no gap. Yeah, there's no gap. Turn your after hours prices on. Flip, the problem is I need to buy 2023 Corolla, which is why I'm considering selling my shares. Hmm. It reminds me a bit of old GME. Makes me happy. It's a cool feeling. It's been a while. I think we stabilize here on the like 2456, like the EMA. Fuck EMA is that? Is that the 180? No. EMA 60. It's none of those things. Why is it? It's not the 150. What the fuck? Why is it giving me the incorrect values over here? Oh, whatever. Piece of shit. Oh, is that VWAP? Oh, okay, yeah. VWAP. Why is that a different color? Okay, I need to change this. Hold on. Style. Oh, EMA. Is the EMA 180? There. Support found. Looks like on the index and GME. This is probably going to be one of the most traded contracts today. Either this or the 2750. So this is a good one to watch. Are they going to realize liquidity on GME at this point? What needs to happen? They need to buy more of it. The graph you posted yesterday about the 4 points on the 4 different price targets, do you think we could get there? I mean, true OPEXs generally see a 4 to 5 sigma move off of the weighted VWAP. So it's possible over T+2 for us to realize the high-end target on that. It'll depend a lot on options buying, right? People are poorer now. People are less interested now than they used to be. So options buying on GME, while strong today, is not nearly as strong as it's been in the past. Hey, Gurk, popping in on a break. Sorry, I'm sure you've discussed this plenty today. Were you selling CCs on GME yet? No. We have stabilized here. We already found like a low and bounced. I mean, I guess if the market drops, we may revisit it. But it looks like for now at least we're holding VWAP. Will this create a lot of FTDs? I hope so, yeah. Generally speaking, OPEXs create FTDs, so the more options people buy, the more synthetic shares are created. The more liquidity needs to be provided, which means the more failures that occur. What are your thoughts on why they haven't posted the 10F? K, 10K. Why does nobody know the letter? Is this OPEX or NOPEX? Is the next OPEX in late May? I mean, the next OPEX would be April. Although I doubt with the liquidity we've seen today, we're going to get any kind of run for April. So yeah, it would be May OPEX. Although, depending on the holidays that fall on those, I'm not sure yet. If the OPEX period has any deferrals, then we're not gonna probably see a run. Quadrupled my fort on my first options play. I bought calls at lows last week. Didn't get greedy, took profits. I've been watching over for a year and learning. Thanks for all you do, Gurk. Thanks, SV. Congratulations, man. I was thinking of buying April 21 puts for SPX before the meeting, but now I'm not sure anymore. Thinking maybe I should strangle, but 13 DT is too expensive. I don't have any exposure now. Thoughts? I'm only straddled for the meeting on now 9 DTE. I mean, as long as you're buying far enough out that the like interest falls off, you're probably fine. Oh no, they got me. I just want to say thank you for constantly preaching risk management. Probably feels like you're banging your head against the wall sometimes. But it really does help. It's making a huge difference. Cheers to finally realizing gains. Thank you so much. Thanks, Howdy. Congratulations, man. Did you remove membership levels? No? In the middle of March OPEX, people already want info on the next one, FFs. Yeah. When JPOW, the meeting announcements at 2 p.m. His speech should be at 2:30. They have 60 days to the fiscal year end to file the 10K with the SEC. They can file the 10K concurrently with the AK earnings release, but it's not a requirement. Can we get an OI update on GME? Not really. Like, I can get that for SPX, but I don't really think I'm going to see much of a change for GME. Call side's a little more favored now than it was earlier. But still a significant amount of calls being sold. Especially for this Friday. They're definitely trying to drive down interest as much as they can. Call buying, picking up. Let's see how the options volume looks. Do you know when they'll release the 1D 10T filing? Also, love you, man. Think the 10K? I mean, they have, like I just said, they have like up to 60 days from the fiscal year end. When I hit see perks to Ray, it's not an option. Very odd. I have no idea. Does someone else want to check? Are the membership levels still there? DRS numbers are embarrassing. RC trying to hide them. I said 10K. I didn't read what he said. I had to upgrade from my desktop computer. Oh, okay. Yeah, that might be why. It might be not possible on the app or something. I just got the phone with the SEC. They don't need to report the 10K because no one is DRS'd anymore. It goes a lot deeper than embarrassment over numbers, folks. 10Q will only be DRS numbers and 128 point Comic Sans. When Jimmy's 10A be released, 10K. You have no idea why they aren't releasing the 10K fresh and free. Difference in book and plan. No one gives a fuck about your DRS shares. When 14S be released? Jesus Christ. Okay, I'm not talking to any of you anymore. Hmm. The 10K is the annual report. My friend Bob Sacamano said MOASS was imminent because of something related to DRS. I told him to shove it. Was I right? I was right, right? I don't know. Are you guys still friends? Is Fubo an attractive price point, or will the turnaround still a long way off? I mean, the turnaround's still a long way off, but that doesn't mean its price won't go up in the future. It's very cheap. Trolls can't help it, Garrick. Trolling is their love language. Love you, dude. Thanks for being here. Thanks, Dustin. Is PiFi gonna release the 10K with Carl's T numbers? It's 40 million volume. Wow. AI. I do believe BTC thinks Powell will be dovish. You sure about that? And YouTube membership levels were not available to me. I had to visit using desktop. Huh. Weird. It's probably like an Apple thing because Apple wants you to like purchase it through their app, so you pay more. Just so you guys know, it's like $5 more to sign up for memberships on like Apple devices versus signing up on a computer. As much volume without a considerable move up is concerning. Yes, it is. Ethan, welcome to Zillionaire, man. Thank you so much, dude. Hit me up on the Discord. I'll get you out into the country club after the stream, man. What's NVIDIA's problem? Another day, another irrational NVIDIA move. Well, their Gamma Max went up a bunch today. My only question about 10K is why would they deviate from their typical way of doing things in recent history, coinciding with profitability? Too much tinfoil or something? Sounds like it. Sounds like you're reading a lot into something that's not really that relevant. What time is the Fed meeting? Or are you gonna stream it? Powell speaks at 2:30, and absolutely. Why concerning offering in progress? I don't think there's an offering in progress. Yeah, I wouldn't say there's any selling going on here. Just concerning because they can, cover a lot of obligations in a narrow price range, and that can ruin the upside potential. But we're still holding like 24. I'm still not that concerned. The market moved down a little bit. We moved down with it. Everything seems fine. Jimmy still seems relatively stable. Ryan Cohen, yes, the real one. Ahoy, mighty pickles! Enjoy this bout of liquid capital straight from my corporate loins. All in a day's work for my favorite bag holders. Just kidding, that's BBBY. Don't worry, I'll release the 10K later today. Pinky promise. Uh, Thanks, Ryan Cohen, the real one. Declining vol on downtick? Bullish? No? Yeah, it is. And moderately, from a technical standpoint. That doesn't mean that the consolidation's not just going to break down even more, though, right? ES has a, well, SPX has a small gap to fill here to the downside. So yeah, we might see one more leg down. You'd think that the real Ryan Cohen would co-fi more than $3. What would cause such high volume on GME without price action? Isn't liquidity not being realized? Liquidity's fairly stagnant right now. We got a little bit back on that bounce. There's some shorting here, it looks like. Interesting. Maybe through the ETFs. And the momentum hasn't really shifted, though. There's no change in the momentum of liquidity realization. I think there's, at least still a little bit more to go. When you say not a great price improvement, are you saying that the price action from after hours doesn't count? Not really. It doesn't matter. I made a nifty 30K today. Thanks for all you do, man. Especially now that we're trading below our peak from after hours. It matters even less. If the Fed goes with no rate hike, how low do you expect the market to move up? Until April SLD? Or will it be short-lived? Oh, the market could go up for a while, yeah. Probably until April SLD. And that could be affected by macro data coming in that'll come in before SLD, like CPI and PPI, PCE. Those all have a big impact as well. Thanks, Mike Hawk. I nearly doubled my port today. I learned it all from you. Thank you. Congratulations, Happy Crappy. What happened to Moonwind? Who the fuck knows? IBKR showing more shares to borrow. Seems like they're tapping ETFs or returning shares. That's part of liquidity realization, right? Is the return of shares. If we bounce here, though, that's a higher low, so pretty bullish. John Wilkes Booth, Pickle Tickler, give Booth a shout out for hooking you up. Thank you so much, man. Made 45K today. Good chip away from the old Gme cost basis. Nice, Ryan Cohn. Congrats, man. What a day to get stuck in meetings. Is there a chance Gme tanks today? What do the tips say? That it's still unlikely. What about the Fed meeting? That we don't know yet. That could change a lot of things. If the market starts tanking, right, then active funds are going to start selling, which unlocks more liquidity, right, and can drive prices down. Guys, John, thank you so much, man. Guys, give Biff another shout out for hooking you all up. Thank you so much, Biff.
There once was a man on Pi-Fi stream, his name was John Wilkes Booth, you see. The comments came in, but the
Alright, downside gap on ES build here.
Soon may the gifting man come to bring Cornichon subs blind in
So
rum.
really variable. Gap on SPX build here. The downside consolidation on SPX looks pretty bullish, if I'm going to be honest. I kind of want to get an out of the money call here. Although this may just be puts coming in as we approach the Fed meeting. Maybe be careful with that. John, you son of a bitch. Thank you so much, man. Guys, give John a big shout out for hooking you up, and welcome to Cornichon. You fucking tease.
There once was a man on Pi-Fi stream, his name was John Wilkes Booth, you see. The comments came in, but the names weren't green, now watch the Cornichons grow. Soon may the gifting man come to bring Cornichon subs blind in rum. One day when the streaming
is a straddle or strangle better to play FOMC? Straddle, just because the 25 rate decision may not lead to a lot of volatility. Dieter, welcome to Zillionaire. Thank you so much, man. Hit me up on the Discord. I'll get you added to the country club afterwards, man. I appreciate it. I think John's giving more memberships and there are people here without them. No, if you guys want free memberships, you can click on the notification from him and make sure you turn gifting on. Enjoy your Zillionaire coupons. I think my membership expires tomorrow. Rip, rough. Assuming JPOW doesn't crush the market, when can we expect the next leg up from GME? Tomorrow or Monday? Or tomorrow or Friday? Say the Fed does 0.5, starts what turns into a crash or heavy correction. Why might a steep correction or crash be favorable to the Fed, consistently threading the needle each month? I mean, it'll bring valuations more in line with gross margins, which is important. It'll put corporations in a position where they'll want to reduce capital expenditure, which will drive up unemployment. Unemployment going up means people will create less consumer demand on goods and housing, which can bring the prices of those down as the liquidity of those increases, hence smothering inflation. Huh. Maybe a non. If we pass 27 again today, I will do. I mean, if you're already a member, you can't get a free membership. If we pass 27 again today, I will donate 100. Thanks, man. Is deferral theory still a thing? Yeah, I think if anything, the price action The price action for this OPEX, especially if we get a continuation of price action, confirms that, because there's no holiday during this time period. What percentage GME calls are still keeping at the moment? The majority? No, I've cut a lot. I've repositioned some, but I've cut a lot of them. I can afford a strangle on SPX for 30th of March with 4,005, 4025, about 30% of port. That doesn't seem bad. Do you know how to manage a strangle? I mean, if you manage it well, you could probably make good money on that. That's not too wide. I mean, obviously wait, because, you know, if SPX pulls back here to 4,000, you know, you can position differently. Is this Carl Icahn getting margin called? Probably not. So when does it upgrade to Zillionaire from free member for the coupon upgrade? Yeah. JPL really needs unemployment. He needs to crush the labor market. Is the stock crash the quickest way to do that? Probably. At this point, a crash would probably be better for the economy in the long term. Hey dude, happy OPEX day. Have you sold any CCs yet, or is it too early? No, I haven't sold any yet. I'm probably gonna wait. I'm not in a big rush. Do you think we'll see tons of FTDs from this move up? We'll probably see some. I would imagine our FTDs in the next FTD period will be higher than they've been in some time. Your position is down 1% of your profits today. What will you do? Oh, Mr. Icahn. Yeah, he's short at a pretty high price. I don't think he has any reason to get out. Even if he does, would we even notice it with like 40 million volume today? Are you proud of the job Brother Cohen has done in such a short time? I'm impressed that they hit positive EPS, but I mean they've just done it by clawing back growth potential, right? So I still want to see them use the fucking money that they're sitting on for something. You know, I still bought a growth stock. And while cutting overhead and everything is a great way to, you know, turn over near-term profitability, there's still no plan laid out for profitability in the future, and that I still have a problem with. You think short and short vol were caught off guard with Jimmy's positive EPS? I mean, I think they've been setting up for a few days now for like OPEX anyway. So probably not caught that off guard. We'll see how many short calls capitulate today and tomorrow. If you're short at 300 or 400, why wouldn't he close at this point? I mean, no, who's to say he hasn't? First of all, right? Like, how would we notice? You know, 50,000 volume a day over 30 days, 45 days, right? Like, it seems like we need to see positive EPS in a quarter that doesn't have Christmas in it. Do you think AI has been advanced enough to keep NVIDIA above 250 through a crash? Chat GPT believes so. Didn't they increase their cash on hand? Wasn't it like $1 billion last quarter, 1.3 now? I believe so. Well, I mean, they sold off a bunch of inventory, so and they had pretty good holiday sales. Like, given the holiday sales were kind of down everywhere, they did pretty well. Did Jimmy use Gap or non-Gap? Non-Gap. If if non-GAAP, is this a concern? For those who don't know, GAAP, generally accepted accounting practices. Um, no, I mean, most earnings are reported in the non-GAAP measurement, so I don't think it's a huge concern. Does it make more sense to cut the rest of my Jimmy $20 weeklies up 1,100% and reposition to $30 weeklies? I think we'll OPEX once the contracts are this deep in the money. Diminishing returns, yeah, but you know, you get to take profits off of the table and reduce your risk on the position. You don't have to roll forward the entirety of the position into $30 weeklies, right? Please do more School of Stock. God, I hate making videos. Pretty sure long-term profitability is based on partnerships with games like Curaverse. The fuck is that? Most are still in beta, if not alpha. Nobody cares about those games. And those definitely aren't their plan for long-term profitability. Or at least I really fucking hope they're not. What are you looking for to sell out of your OPEX position? I mean, I've already taken a significant amount of profits. I've repositioned some of it. But I would say that at market open, I was out of about 80% of it, and I've bought back into about 10-15% of it so far. Lol, you're not a gamer. Yeah, I mean, if you mean I'm not a gamer in the sense that I don't play dog shit B tier games, then yes, you're correct. I'm not. The question is, what would they do with the cash other than expand online sales? I'm not seeing any other clear path. Maybe a second market sector like the baby thing. They said they were diversifying in the earnings calls. They said they were diversifying into toys, which has shown a small amount of growth. That's good. Refurbished electronics, I think, is huge for their business, and I think they need to focus on that a lot more. And I think they need to expand the range of products that they're willing to refurbish. Um, and yeah, promoting online sales, advertising, getting customers in the door, right? If when you do School of Stock, go over some of the entry setups that would improve the earnings of this channel massively. Ugh, gross. Safe to say you didn't make $1 million since you still have your shirt on. No, I didn't make $1 million. Fuck me, Kevin. I mean, I'd make millions if I sold my shares, but I'm not doing that. Oh my fucking god, not a gamer. I'm out, unsubbed, unliked, unwatched. Monkey Island is B tier? How dare you? Freaking learning. Thank you. I did the same thing as you this morning at Open. I would never have done that in the past. Thanks again. You got it, dude. Congratulations. He's not a gamer and has a 3080 Ti. How does that make you feel? Gamer pores. They did say refurbished electronics, but they didn't really expand on that, and I want to know more. I think right now it's still very much just like iPhones and shit. iPhones and like consoles. Can we get an option strat tutorial? What do you mean? It's like the easiest fucking program to use in the world. They have their own tutorial. Why would I do a tutorial for a thing that already has a tutorial? What the fuck? Kirk's P.O. Box guy. Jimmy's slightly outperforming the rest of the retail sector. Are there enough bag holders that only buy items from Jimmy to keep it floating above its competitors? I mean, our earnings compared to like other retail earnings over the holiday season would indicate possibly. What are your thoughts on near-term price potential of GME? Do you think we stay in this range? Are we likely to drop back sub 20 in the next few weeks? I think Gamma Max will move up and we'll see some T+2 price action still. Fuck me. Refurb could be super bullish in a down economic cycle. Yeah. They should refurbish fleshlights. Probably. Transform School of Stock into a place where you just post mortem awesome trades and go through your thinking. Fun, informative, and you get to talk about yourself and your wins. I like the last part of that. You know the part I don't like about it? Making videos for YouTube. Can you do a tutorial on the tutorial? So just open up the option strat tutorial and walk everyone through it. April 4th, a decent date for straddles. Also best to buy in about 1 p.m. Let me see. Yeah, it looks like April 4th dodges most of the near-term IV bump. All right, March 31 does too. Not as much, but hey, March 31 isn't terrible as long as you plan on being out of it by like tomorrow, right? Kramer tweeted about Nvidia buy puts. He's tweeted about Nvidia a bunch over the last few weeks. And talked about it on his show a lot too. Can you do a guide about opening a broker account? Oh, Jesus Christ. Click the referral link in the description. If you want a School of Stock video, just take notes during the stream. He says everything here that he would say there. Yeah. The FOMC is released at noon, so price action would start there right then. JPOW talks 2 hours later. It's not released at noon, is it? That'd be weird. That never happens. The fuck? No. Economic projections and rate decision are at 2 p.m. The Fed press conference is at 2:30. Everything is Eastern time. Okay? I'm disappointed that GME relied on you to mention AI. I mean, we're the only ones that heard that. Hopefully. Others did as well. Do you think Cosmic Warrior has any realized any profits from GME? No. If it's easier to do a live stream, you can do like a live School of Stock lesson on whatever topic. Hey Girk, will you be streaming a Diablo 4 gameplay on Discord or Twitch? I think it'd be hilarious to hear you hate on surprise scares and talk smack. I might play some this weekend. I think the open beta is gonna be going, so yeah, maybe if I feel like streaming. I couldn't sell in the first 15 minutes and watch profit drop 50%. It's all quite stable now. I want to hold my 3 May 1925 Cs. Should I be securing profits as I'm still up 400 to 500%? I mean, at least protect your downside a little bit, right? I mean, you're up 400 or 500%, so you don't have to secure profits if you don't want to. Although it's probably good to secure some. You can set stops and protect the downside in case, you know, anything bad happens, especially with the Fed meeting coming up. I overslept and missed the first hour market because I took some NyQuil last night because I couldn't sleep. I was too excited. I also sold my in the money calls up 500% and repositioned 30% of it back into calls. We're learning, Pickle Man. Thank you, Riku. Nice, Farmville. Congratulations, dude. What did do with Jimmy Profit? CSPs on Upstart. I mean, I guess you could. I fucking wouldn't. Is there even like any put skew there? Are they worth it? Barely. $15 calls. 1.5%. Ah. Not really. Yeah. I mean, there's really no skew there. It's not super advantageous. I guess you could sell them for income, but then you got to go out like 30 days. 30 days out, they're not bad. What's that? Like 13s or 92 cents? It's like 7% yield. That's pretty good. 7% yield for 30 days. I mean, it beats treasuries. Overslept. Okay, I read that. I know you like the last part. The school stock video is the most boring video of all time. You weren't conceited enough. Never again. Delete the channel and walk away. I'm gonna need to do something because this channel's shadow banned as fuck. I don't know. I'll figure it out. Rounded bottom breakout for sure. React video to the so my reaction to the tutorial for option strat. I actually like that idea. In the scenario where the Fed pauses, what do you think the absolute ceiling of Nvidia can be? 10 to 15% above Gamma Max, which is 275 today. Why not pay Dork fake internet money to make the school stock videos for you? No. I wouldn't put that on someone else. It sounds terrible. Some people might need a tutorial on the tutorial on the tutorial. So if you're not sure how to open a website, it's true. Is anyone else audibly cue in response to Gherk doing it? Have you considered just doing unboxing videos of stuff you buy on Amazon? No. My port would like to say, touch hips, kiss lips. Thank you for the massive gains today. Also, Cornishon Rage Quit song. Best moment in gaming ever. 10W release. 10K. 30-day Fubo CSPs on the $1 strike are not bad. How much are they? They can't be that great. Actually, it's not the worst. I mean, if you can get a fill at 10 cents, it's not the worst. Yeah, Fubo's actually got some put skew. But it's also being priced for bankruptcy. React videos of financial bros reacting to big market moves. I kind of want to do a channel with JFresh where we just rip apart people's like custom and private indicators. What if Stephen Hawking was the real Slim Shady but couldn't stand up? Too soon, Boof. I've been gone for a few months. Is Fubo going bankrupt? No. But they're priced for bankruptcy. I don't understand how my Upstart $17 calls are outperforming my April $21 my April 20 strike. Ivy going down while the price goes up? What the fuck? Totally rational markets. Um was it Revlon also? I mean, not when I was trading it. Revlon had a massive skew. I mean, CSPs on Revlon were selling for like 50-60% yields. Didn't Ray Reynolds join Ryan Reynolds? Yeah. He's got some sort of deal that they're working on with Fubo. For his like new content platform or whatever. Gork, I'm down $1 on my 200 Fubo shares. Gork is a shill. It's a 2-year play. Still got time. How dramatic will next SPY options be affected by the theta crush through FOMC? Long straggles and straddles just aren't possible on SPY March 31st onwards. Mm, yeah, yeah, it's not as good on SPY. I mean, the strangles and straddles are just not as good on SPY, period. I think he already sold Mint Mobile to T-Mobile. Or he's in the process of selling it to T-Mobile. Ryan's a busy guy. Obviously, the rebrand to Fubo from Fubo TV is super bullish, as they'll have to spend 2 characters less on all documentation going forward. Nice. And crash steep correction, would the Fed need to step in with QE like they did in 2020? Or could they act differently this time? I mean, if a crash fixes the economy or brings about deflationary conditions, then yeah. Like if we hit deflation, um the Fed will probably move in with more QE. It was T-Mobile. Why does this squiggly line graph you last post in Discord announcements represent? CVVWAP, the arbitrage and GME and the foreign markets it trades in. So between US and foreign market GME trading. Arbitrage went crazy this morning, which means that it's very likely that we're just at the beginning of whatever's going to happen with GME over the next few days, which is exciting. FOMC released at 12. So that's when price action starts. No, it's released at 2. 2 p.m., Bob. Not 12. Eastern Daylight Time. 2 p.m. Press conference, 2:30. Thanks, Darth. Yeah, I'm fine, dude. How far are you positioned with your SPX straddle? The 31st. Then both of them, actually. Jimmy's not buying Amazon. Like JFresh says, the run hasn't even started yet. I mean, depending on if Gamma Max moves up today, the Fed rate decision today, I mean, there's a lot of variables, but GME definitely still has more potential to move up, and its price stability in this range should be indicative of that. Have you considered straddling any others? If they were done realizing liquidity, we wouldn't be going up or sideways. Trading economics says 7 p.m. for your time zone, Tim VGP. But Washington, D.C. is on Eastern Daylight Time. At which point, you know, the Fed minutes from the meeting and the economic projections coming at 2 p.m. And then the Fed press conference is at 2:30 p.m. This is the only time zone that matters in the market. Sometimes Chicago, but mostly just not for you guys. So since you already sold most of your calls at open, if today's outcome is bullish to the market and Jimmy confirmed, there's more to go in the coming weeks. Would you... Sorry, hold on. Would you back to your original positions, or will you sell CCs mostly? I mean, I have almost as much leverage for a continuation of the upside as I did this morning. Not quite as much, but almost. And then, but I only deployed, 10% of the original, 15% of the original capital that I'd outlaid. Right, so I took all my profits, and then I bought further out of the money calls. Of roughly the same quantity, not quite as many. And then yes, I can also sell covered calls. I don't think we're going to see a lot of institutional interest come in on GME. Maybe some pension funds, but not at these prices. It's the only time zone that matters. You don't need the for the market qualifier. Eastern Daylight, same like New Greenwich. $131 likes for 1K. Let's go, gang. If you guys could, drop a like. It's a big help, and I appreciate it. Gherkin, my friend Sean used to be a glory hole jockey, but since he has found Jesus, he's no longer a homo receptacle. Can you say some nice things to him and let him know he can join our cult and be surrounded by pickles of all shapes and sizes? Yeah, he can have all the pickles all over his face, mouth, and a noose that he would like. I'm sure many in the pickle jar would be willing to have banter with him. Indulge. How would you play more potential price improvement? GME now if you didn't have a position already. I don't know. I'd probably just get some like out of the money calls and see what happens. Is it normal for our pickles to be green? That sounds like a disease, maybe. Are you waiting for the Fed to enter more close dated GME calls for the next couple days? Sure. Can you say hi to all my friends? But can you wait a few months for me to get some? Okay. Is GME really at 45 million volume already? It would appear that way. Upstart, lower, low? I don't know. Seems kind of stable. 414.30C for GME, dumb? Not necessarily. If the price goes up, that'd be great. I mean, I don't know. We'll see if Gamma Max moves up to like 27 or 28 tonight, right? And then like our potential for upside is increased. 100 shares of Upstart, but that's like 60% port exposure. Maybe not. Interesting. That's a lot. Big defensive is $25 position. Same like 180. I mean, 25's an important point for capitulation on the short call side. Lots and lots of short calls sold at 25 right now. Gherkin would now be a good time if it were to possibly move in the direction where predicted as it was. Don't you have a car to cry in? 60% port exposure is a lot. Looks at NVIDIA put position. April 20p, 19.5 KOI now, has seen 5k volume. Hopefully that's them moving out. We'll see. We'll have a better idea tonight. Chances to go up, or are we done? I think the fact that we haven't dropped is pretty good, right? Do you guys not remember how OPEXs go? When the op is done, the price doesn't go flat. It just drops like a fucking brick. There's still a lot of, yeah, no IV crush either. There's still a lot of potential at this point. XLE at 80, good, bad? Eh, might not be bad. Trying to play the energy turnaround. Again, something I'd wait for Powell on. First time, huh? If there was a trolley coming down the track and all the Dans are strapped to it, would you divert the trolley if you had to give up gelato for life to do so or not? Absolutely not. And the Dans wouldn't expect me to give up gelato. How are the liquidity lines looking now? The same as they looked earlier? Like the stock? I don't want to average down the 50s. $8.18, $10 CSP. Would you try and buy back during this run up? Or probably it'll expire worthless. I mean, how much is it to buy it back? It can't be that expensive, right? It's 30 cents to buy back. What'd you sell it for? I mean, it could expire worthless. But bought it at 88, bid is 37. So you've made a little bit more than half of your money back. I mean, if you want your $1,000 tied up for another 149 days and you can't do something else better with it than, capture that extra 37 cents, then I suppose. I have an SPX 21 3850p. I've been holding this safety hedge for the last while, down about 50%. Better to cut and reposition closer to the money. SPX April 21 3850. I mean, probably not until after the Fed meeting. I guess you could reposition it if you want to. Was that like part of a strangle or something? Is the cost basis on it covered by a hedge, or is it just like you just got a raw put hanging out there with no protection? They could legit buy a 6-month treasury. Yeah. What needs to be done to make this rocket ignite? More call positioning needs to come in. Hey Greg, I have a derivatives exam here in Canada soon. Any tips on how to remember to calculate margin requirements for different option strategies? Or is it just a case of memorization? Just memorization. Why do you need to do that there? Do they not have computers? You need to do it on like a pad? Fucking Canada. GMECCs are probably waiting for the minutes too. If bearish, they might need to close. If bullish, they're fucked. Why would they need to close if it was bearish? It's covered from the province on the call side, which I've offset with 40/50. Oh, okay. Cool. Yeah, so you could definitely you have some mobility in the position then. I don't know how much. I don't know what you made, but I would say that if you covered it, then you've got a little bit of mobility there. Someone needs to call out these people short at 25 and tell them they can reposition to get this below 25 again if they close. More money we made with a rinse and repeat. Yeah, except they're probably naked and they really don't want to close them at a loss. Don't forget Ivy went up a lot. You need to be able to do it manually for the exam. Ridiculous. Also, my Nvidia continues to hit intraday highs. My puts are down 25%. Well, the potential high for Nvidia went up today. And they're doing their fucking press conference thing right now for GTC or whatever the fuck it is. Is there anything wrong with using 1DTs for my SPY straddle today? You're overpaying for them. If it moves up, you could get burned on the volatility. So the more NVIDIA says AI, 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 the more it moves up, the more it pumps. Insanity, it is. And NVIDIA's fucking out of control. It's almost trading at a 160 P and 156 PE. Has NVIDIA sold any AI? They did several months ago. But those people already have, those databases. So like Google and all those companies and Microsoft, they already bought like their current iteration of their like supercomputer already, right? So those are sold. And then they're sitting on a bunch of video cards they can't sell. I just closed some GME calls with 30K profit. Would you say for repositioning May or June, 30 to 35 are decent? If I buy 25s when they were at 17, also really appreciate for all you do, man. Yeah, no problem, dude. Probably okay. I mean, they're I don't know if Gamma Max is gonna move up that much, but it could. It's roughly equivalent. I mean, you're paying more for IV right now though, because IV is elevated. So remember that. If the Fed rates 50, is there any chance the market could hit 38.80 today? I'm thinking of a lotto ticket. Risky. Maybe? I don't know. I want to buy lotto tickets. Mhm. Huh. Would a $50 cause Nvidia to crash to Earth? GME shorts too close and SPX to drop? Because if so, I'm rooting for chaos. Does that look like stop loss hunt on Jimmy to you? Maybe? I mean, they really don't want it pushing above 25, I don't think. How's the SPX OI looking? Stacked in any direction? I mean, downside's more heavily leveraged in the long term, but Gamma's pretty fucking flat right around where we're trading. Hold on, I want to look at some options volume shit for GME real quick. So, options volumes died down a little bit near the money. Still some puts coming in at like 24, 23. Calls coming in at 25, 26. The $30 strike seems to be picking up a little bit of popularity. 421 starting to see a little more call interest, although I would say that most of it is still sold. May picking up a little call interest as well. Okay. Looks like SPY has a lot of support to the downside at 4,000, and the Gamma flip is at 39.97. Gamma relatively flat around the range we're trading in, I think, on the long term here. Yeah, pretty flat Gamma. We're kind of at the bottom of the call interest. So, I would say the call side's a little more stacked, but mostly because of shorter dated positioning. So the expectations from FOMC, bullish, but only for like the next week. Interesting. And we're so far from gamma neutral and delta neutral, it doesn't matter, does it? DN's 223, GN's 235. Yeah, I still have GME positions. I got new ones. Is cannabis legal in New York? Yeah, I think so. 0.25 and a hawkish stance. Bearish. Could that just be people hedging their long dated put positions? It could be. Anytime you see like shorter dated positioning skewing extremely in one direction like that, it's usually due to hedging. If we break 2450, next resistance 2550. No, the next resistance is just 25. 25 is a pretty important one. You know, we failed to stay above it on the last two tests. We almost broke 26 earlier, but that also failed. Mostly in line, like we're trading kind of with the market right now. So I don't think we'll see any extreme price action until the FOMC. It tends to, I mean, with the exception of Nvidia today, it tends to lock everything up quite a bit. Shares of TQQQ and SQQQ a terrible strategy. I'm bearish long term, but I mean, the returns on them just kind of suck. Don't worry, guys. The NASDAQ 1 will stabilize the market no matter what JPAL says. Can someone explain why you chose QQQ rather than SPX or SPY? I didn't have a lot of settled cash, and I'm just buying lottery tickets. NASDAQ's volatile. Been a while. What do you think about what's up, Sahib? Balaji's $2 million wager that BTC hits 1 million in the next 90 days. Sounds like complete horseshit. Whoever fades the top on NDA is getting rich. Oh, you mean NVIDIA? Yeah. Oh, hey, I didn't think you would actually read my comment. Thanks. No problem. I know what you think it will take time for NVIDIA to drop, but don't you think it will start with a big drop day? It could. It may just bleed out slowly over time. Did you quickly go over how you're able to sell your weeklies in GME at open? Use market orders, you figure out option value and use limits. I usually figure out the value and use like I'll scale the limit orders. So I'll place like a number of like I set them up in like pre-market and during after hours, but I'll like set stops with like 10% above where the ask should be, 10-20% above the ask, and then scale down to like 20% below the bid across the. So I'll have various limit sells at each price, and then see what fills, and then close out the rest with like a market order. Sometimes you can fill like way above the actual value at market open because IV spikes so high. I think we see an upward par up on a dark pool dump today. We could. Possible. SQQQ September calls here. Um, Not a bad price if you're bearish. TQQQ not quite as good as SQQQ right now. For at least for options. Why are you looking as short term as May, June for your NVIDIA position? Is it more theta better for something like this? I mean, I have some positions that are September and January also, but I've bought those mostly around this price range. I don't really need to add to them or average them down yet. They're pretty much fine. I bought a few of those like in the 250 high 250 range, mid 260 range. So I'd like to use this opportunity while price is really extravagantly high to buy shorter dated and nearer the money puts. Why SQQ calls versus QQQ puts? Well, I mean, if the Fed comes in really hawkish today, we could see multiple days of downside on QQQ, which would mean SQQQ would outperform. How dumb was my entry into SPX May 3850 3700p and July 3200p today with no upside hedge whatsoever? What's your September and Jan NVIDIA puts? 120 and 100. Who killed JFK? The the guy in the bookshop? Herbert Hoover? Beyonce. Jimmy, no stop. Hmm. I think you've got the wrong assassination. AWBO. Maybe Dave Grohl, but don't tell Dork. Use your pickle powers to raise Jimmy. I mean, I'm just happy with it not falling. Looks like we're holding the $24 floor and bouncing before the Fed with this higher low. We'll see. I doubt we move a lot before the Fed meeting. I am a master. A strangle on 4,000 I bought is profitable on both sides. 1 and 3%. Magic. I have some deep in the money calls April, May 1750, debating on using selling CC calendar spreads, then exercising versus just seeing if it T plus twos, then selling. Opinions? Up to you, man. I have my opinion on it's not going to be really relevant to your situation. I have a lot of GME shares. I have no desire to exercise options on it pretty much ever. Isn't there something like 9 trillion in US debt coming to realization soon? How exactly will that play out? Congress will argue about it a bunch and then raise the debt ceiling once they stop getting paychecks. Average down your weekly 30s on GME or no desire. Yeah, I don't really care. I made plenty of money today. I'm not really worried about what happens after this. I know a lot of you are. I don't know why. Don't full port all your gains back into the stock until it's picked a direction, maybe. You can always chase. It costs a little more, but who cares? Right now there's no volume. So you just have to be patient. All good things come to those who wait. I know no one wants to hear that, but it's true. It is true. Too late, full ported 50C0 DTEs. On what the fuck has a 50C0 DTE? Like, tell me what instrument. XSP? Okay. Fucking pores, yeah. SPX not looking too hot. You mean falling back below 4,000, but still trading like within $10 of the expected range for the day? Yeah, that's really not. Double down on NVIDIA 200p May or open new 200p Junes? I'll probably add to my May 200s. I think I'm profitable on those below $35, so I'm okay with that. After the FOMC meeting, I'm gonna buy into more NVIDIA puts. Probably today, maybe some more tomorrow. I guess you could, David. VIX? Probably not. What if NVIDIA ends up like Tesla in a never-ending short squeeze? I mean, it's got kind of the same ETF effect going that Tesla had. But Tesla also dropped massively multiple times during its run up. And then, as someone who faded the top of Tesla in November of 21, it was awesome. The Fed decision is 25 BPS, hawkish, but he says there's always money in the NVIDIA stand. How much theta would you get for straddling FOMC? I have like 9 days on 9 days of theta. What would it take for ETF nuclear reactors to melt down? Lots and lots of selling. Or just everyone going short all at the same time. Hey, Gherk, you fade the top a lot. But have you ever gotten a skin fade and a blowout? No. Still range bound, yeah. I mean, we've been trading in the same range like all day. We had a nice little bump earlier. We may move towards the downside as some puts come in. Although, I wouldn't say it looks really promising. But 4,000 is the center point for the neutral positioning, right? So when FOMC notes come out, we wait till the first up down peak happens, close the winner, then double the loser, wait for the peak in the opposite direction and sell. You can do that. Provided it moves enough and you have enough theta on your other leg. I'm doing alright, man. How are you? The video should report at end of May, correct? Yeah, I believe so. But unless the Fed pauses rate hikes, I don't think we'll have to wait that long. Fair enough. I have September's and January's, so I don't think there's anything wrong with that. I might pick up some like Jan 140s and September 180s also. I sold 95cc on Google 2 weeks ago. I've been rolling it, and I hate that Google keeps going up. Would you let it get taken away? Yeah. I mean, if I get assigned on Google CCs, I don't give a shit. September 100p NVIDIA gang. Nice. Jimmy dying? I mean, Jimmy just going back to resistance? Dropping in line with the market? Yeah, that's not a big deal. VIX be crawling back. Cool. This isn't MOASS? No. When sell CC on Jimmy? Sorry, I just got here. I'm not gonna fucking tell you. That's when I'm gonna sell them. I mean, to be honest, like I'm not gonna tell anyone when I'm selling covered calls or where I'm selling them at. Because then I get front run and fucked over. But I will sell them at some point. I can tell you probably not today. I'm fixing to cut these upstart 421.20s on the next high test. You with me? I don't know. I really kind of don't care if they go to 0, to be honest. No, I don't, Barodactyl. Thanks for asking, though. Could Jimmy hit 27 today? I don't know. It depends. Probably depends heavily on the Fed decision. I should have a chance, right? Ideally. Provided JPOW doesn't fuck us today. Just me then? Okay. Might be just you. My tip is awfully lonely, and touching it myself doesn't do it for me anymore. Sorry to hear that, Grim, too. Have you tried Grinder or Tinder? QQQ would be the faster mover. No, it's just that SQQQ's profitability compounds on each consecutive day of dropping price, right? So, over time, its performance on a long, like a sustained drop, its performance can exceed that of QQQ's, not notionally, but percentage-wise. Are you planning to cut the 30 weeklies? I don't know. Maybe today. Maybe tomorrow. There were 20k GME 20Cs with a pickle emoji on Craigslist. Do you think I could ask them to sell me a few, or is it all or nothing? I mean, I think you could submit an offer and see if it was accepted or not. Is there a book more beginner friendly than Options as a Strategic Investment? That one is dense in multiple ways. No, it's pretty beginner friendly. I mean, I guess you could look at like your broker's like options information, but I mean, it's not going to have enough depth. Options are not easy. Does that work the same on SPXS? Yeah. Interesting. Before opening the book, it's important to get an engineer to validate your foundation for the load. Yeah, you guys, if you're thinking about buying options as a strategic investment, make sure you call a structural engineer first. Jimmy with support. Cool. Yeah, let me tell you something about the next hour and a half of Jimmy's price action. It doesn't matter. Unless IV tanks and we like fall down to $20, I wouldn't be super concerned with it. The guy looking for a more beginner friendly version, tell him one fish, two fish, red fish, blue fish worked wonders for me. JK, he should paper trade. I was gonna say green eggs and ham, but I guess one fish, two fish. Falls 1269 is gonna ignite this rocket. Okay. I've tried reading options 3 times and only got through the first 3 to 4 chapters. I'm in the 4th now and on chapter 8. Progress is hard, but I feel really pretty accomplished and confident this time around. Nice. A better way to use the book if it is super daunting for you, which I can understand it being, I guess. Um, is use it as reference material. If you want to know more about a specific subject, you would go to the index, find that subject, and then just read that section that's pertinent to you in the moment. My 3080 400 April Shingle on SPY is up on the call side. Am I bullish? I, I don't know. Are you? What are you looking for from Jimmy's price action in the next few hours? It to continue to chop with the SPX. $10K. Jesus Christ. What's going on with natural gas? I have no idea and I don't care. I'll be right back. All right. Looks like I missed absolutely nothing. GB inversing SPX. A little bit. Would you be looking to add any EPAM here long term on a dip or around sub 200? No. I guess that would depend on the Fed decision, but probably not right now. No, I don't think it's safe to assume that, Tyler. Starts at market open. Stuffing. Is this just me or do peanut butter and jellies taste better on like whole grain bread than they do on white bread? Write my PB&Js on 12 grain and I'll never go back. Exactly. I'm also eating your Reese's Puff cereal ending. It's so much better than the full-size Reese's Puffs. The perfect PB&J is really important. So first, a brown bread. Soft, ideally. You don't want it too hard. Now you can have this lightly toasted or not toasted at all. Second, a gourmet jam or preserve. Third, high quality peanut butter. Crunchy. The crunchy is really important because it adds the opposing texture to the jam or preserve. I mean, marmalades, it's a different story. I mean, no hydrogenated oils. And then unsalted. No sugar. See, the salt you add yourself. I like to use like a larger structured like kosher salt or a flaky sea salt. That way when you get those like little bites of salt, they really pop. Unliked and unsubbed for what? Mike sells CCs. Poor food? My PB&J is fucking amazing. Preferred jam flavoring? Today I had it was a 5-berry blend with red. God damn it. I should get the name of that berry. Red currant. No, not acai. It was red currant, cranberry, raspberry, strawberry, and I don't know what the other one was. You're too bougie now? I bought it at Costco. All right, Mike. What's your preferred peanut butter and jelly? Oh, I forgot the most important thing. The ratio. The ratio is 65% peanut butter, 35% jam. Well, you weigh it. Don't mix the peanut butter and the jam before spreading. Then I'd get peanut butter in my fancy jam. You can't put peanut butter on both sides, otherwise the jam rockets out of the middle like a wet fart. Uncrustables are disgusting. Is 90% jelly, 10 peanut butter a risk on move? Yeah, absolutely a risk of getting jelly on your shirt. Bakery bread. If the market tanks today, do you think we might see GME at 25 regardless? No. Try them deep fried or baked. Interesting, Eskel. I call Uncrustables sadness bread. You need to bake the Uncrustable with air. You know what's better than 2 slices of bread for your PB&J? A crepe? What are you, a child? You're eating sweet crepes? Next you'll tell me Nutella and banana. Crepes should only be ever eaten sweet with lemon and a light dusting of powdered sugar. And butter. Shitloads of butter. To remind me of my roots as a child. Cinnamon on a crepe? Caster sugar, it needs texture. Hmm. Zest and butter, not juice. You could candy the zest if you want a little extra sweetness, but that seems like overdoing it. Like, it'd be cloying, you know? French cruller is the best donut. You're actually not wrong. That's right, Lance Fox. You do win. No, it's not a beignet. Gross. Is it crepe sushi or cake? Depends on how many crepes you have on top of each other. What's your favorite donut? I think I just expressed that. Have you ever tried one of those cronuts I keep hearing about in New York? Yeah, they're not good. I prefer to toast the bread I use for my PB&J. Thoughts? It's fine as long as it's not too toasty. Like, you can't warm, slightly crisp outside, soft center. If you go down the scale to like crunchy, that's a problem. Then you've put the texture in the wrong part of the sandwich. And have probably overpowered your jam and peanut butter with the flavor of the caramelized bread. So, you know, toasted, but not to the point of caramelization. Well, what if you made a preserve with bananas? Rhino M. Bananas are basically like a berry, right? Ralph Wiggum, welcome back to Dillionaire. Thank you so much, man. Hit me up on the Discord. I'll get you added after the stream.
Happy birthday.
Peanut butter and jam is non-existent in the UK. I can't imagine ever eating it. Try it. It's delicious. You know what else you guys don't have a lot of? Other good food. And that's okay. You could start a whole trend there. Like, open up a peanut butter and jelly shop in London. Get rich enough to live in London. Boom. Life goals. Just a crepe plain with a mass amount of mimosas to soak up the alcohol so I don't fall asleep at 2 p.m. Okay. You can just drink Red Bull in your mimosas. I replace for my mimosas, I use, like the orange flavored Red Bull and then just vodka. It's better. And you still get that light effervescence that makes you feel brunchy. London food is better than any city in the US. Sorry, truth hurts. Pretty sure that New York City has more Michelin stars than London. I'll double check, because that may not be true. Fish and chips with PB&J. I mean, worst case scenario, you can fry it and sell it in Scotland, right? And just like that, I brought all the British back. If you started an OnlyFans where people paid you to give out life advice and insult them, it might rival your trading profits. Maybe. Market, spy breakdown. No. No. Tokyo has the most Michelin star restaurants. I know. Of course it does. Isn't Barcelona next on that list? New York City has 4 more restaurants with Michelin stars. Aha! Great research, Stonk Man. Well done. My creamy rim is now encrusted with crushed peanut. You're welcome. You know, also have more of it in the US than the UK? Dentists. Do we? They have dentists there. I mean, per capita, it's probably the ratio is probably equivalent. I have bad news. People will be talking about Lenixis for a while. He made back almost all of his lost money last night, or he just lied and posted a bunch of fake shit on Wall Street bets. UK healthcare, way better than USA healthcare, though. Yeah, well, I mean, are you rich in the US? Or are we just talking baseline? No, Marmite's disgusting. Hmm. I'll be pretty stoked if SPY goes to 390 by FOMC. I wish it would trend to the upside and not the downside, but we did need more puts bought, so. Mar might, but PA might not. I'll see myself out. Okay. Marmite and Vegemite are foul. With a U. What's with Denmark and like having just as many like brutal police videos as Brazil? Has anyone seen that the rise in like Denmark police chase videos? Give it to me straight. Am I still getting modded today? No. You're already you're the mod for the Ko-Fi. What more do you want? It's not an AI video. I thought Denmark was a really happy place too. We're unhappy but non-violent. If there are any new lovely humans participating in chat today, consider liking or perhaps subscribing to the stream. That's a big ask. That's 2 buttons. Isn't Denmark the Midwest? Interesting. No. They have a warm water port. We invented Bluetooth, you plebs. Is that why the Bluetooth symbol is a Nordic rune? Runic glory? According to Gherkin, if you travel west of New York, you're in the Midwest. Well, until you reach another large body of water. Salt water. Do you think the cops in Denmark also eat donuts or prefer to eat Danish? Racist. How would it have cost hundreds of thousands of dollars if he's a vet? Functional Chungus, welcome to Dillionaire. Thank you so much, man. Are you currently delta neutral on your SPY position, SPX position? Are you leaning towards calls a bit more? Is trending down before the meeting means bullish as they want to pick up calls at a lower price? I think it means that they're buying puts because the put side of the straddle is not sufficiently hedged. We talked about this last night because the market rose into close that more puts would need to be bought to the downside. So a downside drift was possible. It does not mean they know the outcome of the Fed meeting. I mean, it could be good for commodities more broadly. Express a value play now? I don't know what you're talking about. Should check France right now. Biker cops that roll over people, women thrown on the ground, and repeatedly beaten with batons, smoke grenades thrown in heads. Like they put it in the head? That's some medieval shit. Flashball guns used in people's junk while yelling. You've let your balls fall? That's intense. I'll stay out of France. Paris is smelly anyway. Congrats on 20.5k subscribers. That's the same number of subscribers I've had for the last year. Thanks, Girk's publicist. You're really kicking ass. Jimmy's staying stable because there's not enough liquidity to push it down, or because some OPEC's covering? Why not both? I'm feeling bullish for today's meeting for some reason. Noted. Yeah, we'll see. We'll at 25 BPS, we're gonna need to see what the guidance is before we see any real effect on the market. Ooh, they're pricing up IV. Well, just for a second there. Oh shit. I said Paris is smelly. It smells terrible. And yeah, I know I live in New York. New York just smells like piss. Paris smells like piss and vomit. French piss, which is far higher wine by volume than New York City piss. What would JPOW need to say to tank NVIDIA? We've decided to increase the federal funds rate by 50 basis points. I've never really spent a lot of time in New Orleans. I would like to add that New York gets more rainfall per year than London, so cleaner. We also have more sunny days. Sorry, Paris. When I become Pontiff, we will stream at NOLA. Okay. 70 years of Iranian history has entered the chat. Has it? The Bronx on a humid summer's night, right after the restaurants put their garbage out. Nice. I would like to make a protective put on my game. I only have 900 shares. How much theta should I look at? Thank you. For protective puts, you generally want a fairly decent amount of theta. Like 90 to 180 DTE. And you also want to be in the money, which is risky right now, but Otherwise, you're overpaying for implied, like, extrinsic value on the contract premium. What's a humid summer's night like in the Bronx? 75 degrees with 60% relative humidity? Oh no, like 96 with 80%, 80-90% humidity. What time do you want me to come over to start the stream on Monday? I have no idea what you're talking about. Did you become a pontiff? Oh, please tell me that didn't happen. Not yet. They got me, Gurk. They stopped me out of that last Jamie dip. 800% gain, like some sort of pour. Repositioning if I get another dip. Okay. Not yet. I don't like that implication, Kendra. I need to raise the price on Pontiff. I'm just seeing people learn and succeed in the community. Worth the bittersweet trade-off of GME run like this means answering worry-filled questions all day. Will you ever feel pure joy again? I find joy in the Schadenfreude. So, yes. If somebody makes Pontiff, you might have to be an entertaining person. Actually, I don't. Is Kendra Wilson DFB? Please say no. I don't think so. I also hope not. My AMD shares position is almost up 90% from your Pickles pick way back when. God, I love you, Dad. Nice, dude. If JPOW gave us 100 BPS hike, would you have faith in the Fed again? Yes. What's up, DFE? How you doing, man? You stoked to sell some cover calls on this run? Does all this volume mean they have a ton of liquidity now? I mean, no. It just means that there's a lot of churn. If I was really DFU, would you finally love me and treat me with nicely? I do treat you nicely. You've gotten far more of a hall pass than almost anybody else here. If JPOW gave us 100 basis, except maybe Darth. If JPOW gave us 100 basis point hike, how much would you make in puts? Enough to try to place my bid for First Republic Bank. Kendra may not be DFV, but walk-in is for sure trades. Why is Stefan never on topic in chat? I think he just comes in here to pontificate. Also, the autism. Thanks, Lawrence of Arabia. March 22nd, 2022, 60 million volume day. 23rd was 100 million. I hope we see that again. I hope we do too. That'd be really cool. Stefan was talking Z-scores on Fubo. Just don't bother listening to him. That's the easiest way. All right, Papa, since you won't answer my question, I just locked in profits. What was your question? How am I supposed to see you with your white, ghastly name? Locking in profits before the Fed meeting on GME 20Cs. I mean, I sold most of mine this morning. But yeah, I guess you could. You're in the money. It's not like you're losing theta. It's kind of up to you. Maybe just put in a stop. That way, if the market gets fucking rugged, you're safe. It's my birthday tomorrow. Can you ask RC to pump the stock? I think he's done all the pumping he's gonna do. Maybe he'll tweet tonight. Maybe he'll tweet, I really like weekly options. Or like a little like poke at Warren Buffett and be like something about derivatives. Is nat gas dead? I mean, it's been kind of dead for a while. It's weird how much people care about what RC says. All anyone should care about is what JPOW says. I agree. GameStop isn't doing a cash dividend. If they do, I'm gonna buy a different stock. God, why does nobody understand the point of cash dividends and how they affect growth? I'm holding one GME 30C weekly as the upside hedge for a pause. Nice. I have some of those as well. If JPOW rugs the market with 0.5, how low do you see GME dropping? I think it could drop pretty hard, right? I know the real question you're trying to ask, and I'm not going to answer it for you. I have 100 upstart next weeklies as a hedge for a pause. Pours, aka me feel cash divvy, means hedgies are so frickered. No, it doesn't. They'll just pay it. It's not that expensive. And if it's expensive, GME will put themselves out of business. They need to grow. The irony of GME not being a dividend stock and SS wanting that, but not learning how to sell CCs is pretty sweet. It's kind of funny. Great. Oh, okay. I've heard people say DV sold, but how would anyone know that? I mean, they wouldn't. FSLR worth waiting until FOMC to buy more puts. Yeah. It's well, it's in a, you know, it's kind of in its own sector. Green energy stocks. Dropped by tomorrow is T+2. Dropped, but tomorrow is T+2. Well, not really. Kind of. End of tomorrow, Friday. What happens if GME maintains a price above Gamma Max? Tendies? Could be sweet tendies, yeah. Why the fuck would DFE sell? His cost base is probably negative $50. I don't know. Realization of his thesis? Man, real infinity pool is a negative cost basis. I'm so close, Dork. I'm so close I can taste it. It's taking everything in my power right now not to just sell slightly out of the money 30 DTs for $3. 45 DTs. Someone posted a $280,000 put YOLO in the Discord. Probably fake. What is it, on Wall Street Bets? I just assume all of those are fake. Will your Gamma Max or GME tonight encompass all of today's options? Yes. DV sold, reinvested all of his gains into MMTLP, so he's broke now. Think how ashamed you'd be if you got assigned on them. I don't know if I'd care. I hate to be this guy, but DV would probably sell at least 25 to 50% of his position to diversify, especially with current market conditions. Or he'd just sell deep in the money cover calls. DV got the AI hype train and bought NVIDIA. He could diversify just with his CC premiums. Yeah. Do you think people that if you do people think that if you get assigned on CCs that you can't buy back in? Yeah, they do. This seems to be the impression I get from a lot of people on cover calls. The shares are gone forever. And I think that ties into like that kind of like super stonk like half-assed logic that like some shares aren't real. Like somehow the shares that you bought in, you know, at the peak of February 2021 are more real than the shares that you could just buy today. Or they're afraid of missing MOASS. Like they won't buy back in before MOASS happens. Wait. The shares are not serialized? They're not. Is it safe to assume that OPEX covering is nearly done and all of the future upside we might see over the next few days is because of GEX? So if we drop enough because of JPOW, then no more ups. Potentially, yeah. That's a pretty safe assumption. You know what's not real? Birds. Hmm. I see you too are a man of culture. Yada yada, generational wealth, yeah. Shares same like fungible tokens. I'm nearly done with letters for Algernon. Great recommendation. Any other fiction recommendations? Thanks. Have you ever read Dune? Do you want to read a story about a messiah written by a guy who was very much on acid the entire time? Space Jesus. I've almost finished this 10-page story, Rex. How about a 700-page one? Is it that long? No, it's like 300 pages. It's a quick read. It goes by rapidly. The spice must flow, much like liquidity. Spy-fi trades, whatever Houston does, do the exact opposite. How do I hedge for the AI robot uprising in a couple generations? You don't have to, you'll be dead. Or you'll be one of them. I hated Flowers for Algernon. I read it in 6th grade. It still haunts me. It's haunting. It's scarier that it's playing out in real life now with people using AI to do their jobs and tasks. You get a stream card of Gurk riding a sandworm from Dune. That could be kind of pornographic now. I'm buying a lake house for the weekend sexual parties. Should I put a mattress on the floor or buy gym mats? Gym mats can cover the entire floor, but mattresses give extra bounce. Thoughts? Also, Kool-Aid for hydration. Can I spike it with Blue Chew? I mean, I guess you could. Although I feel like maybe a carbonated beverage would be better so that it stays well mixed. Maybe an acidic one. The gym mats are just get thicker gym mats. You need extra spring in your step. Jay Powell, Lauren Savior of the market. When will OPEX end? Walken Jackson and Yellen NFT party favors will be located under your seat at today's meeting. Best I could do is a stream card of riding a sandworm from Beetlejuice. Nah. What kind of monitors do you use? AOC and one of them's a BenQ. Desktop? Yeah. What else would it be? Come on, JPOW, rug pull us like you mean it. Well, implied volatility has been going up. My OCD does not allow me to use mismatch monitors. Well, my horizontal or portrait mode monitors are BenQ, and my landscape monitors are AOC. So it's not that mismatched. Prediction: Pickle Jar loses money as in disappointed by end of day. How? How can money be lost in this market? Have Smart Money sold most of their bags to retail yet? Largely. Well, Q isn't pronounced qua. Money getting lost in NVIDIA puts. You've said that like 15 times today. Generic question: where to deploy a few grand? And NVIDIA's basically traded in the same range all day. Where to deploy a few grand sitting idle on a day like this? Some basic risk averse income strategy? Intel CSPs or something? I'm just delta neutral on the indexes. I don't know, I guess because I want to make money by the end of the week instead of just watch my money yield 0.005%. Is it safe to say there's less than 1% chance JPEG goes to 50? I think the chance is greater than that. I don't think he cares about the banks that much. Otherwise, he would have saved SVB instead of just stealing their assets and then charging the other banks a premium for the privilege. Worth it to roll my 421 1750 upstart calls down and into weekly 15s. Gross. I mean, if it's not going to 1750, why do you think it's gonna? So you're gonna make what, 34 cents and then lose the difference? I don't think that's worth it. 2 o'clock, so 23 minutes. Well, give it a shot, I guess, Paris. It would be amazing if he comes out with 100 BPS. That's got a very slim to nil chance. So order of likelihood 25, 50, pause, cut. Yeah, I think that's probably the order of likelihood. 25 by a large margin. 50, pause, pivot. Poll? Why? I don't care about other people's opinion. It's my show. So what's the next 7 to 10 day timeline for GME? OPEX ends today. Friday is T plus 2, then Tuesday is T plus 2 from Friday, and then expect downside on GME. Could see it before then. But you do have your dates correct. Even 0.75 would be JPOW saying, I want this all to crash and burn. Isn't the current terminal rate only 0.5 up? They can change that. We need 0.5 to hit the terminal rate. I think honestly, their best bet, and I don't even think it would be that bad, would be to go 0.5 and then say that they're going to hold with no rate increases for X number of meetings to breed confidence. But still hit the terminal rate to address the current rise in inflation. And I think just maybe that could give them the soft landing they're looking for, while also fulfilling their mandate. Why QQQ? I wanted to buy a bunch of 5-cent calls and puts. When was the last time we saw 55 million volume in one day for GME? It's been a while. Do you think a crash is unavoidable? No. Are you cutting your upside hedges when the rate decision comes out at 2 p.m., or would you wait for the conference? If it's 0.25, I'm going to wait for the conference. I think Volcker kind of surprised everyone. The Fed wasn't very transparent back then. Wait, what's the Fed's mandate? They never talk about it. It's pretty much all they ever say. Will this cause big FTDs on Jimmy? It'll cause bigger FTDs on Jimmy. What kind of reaction do you think that would cause, the 0.5 with the promise of a hold? Knee-jerk would probably be bearish, but I think the recovery would be quick. Like, maybe bearish until PCE? I'm driving and I can't stop to pee. How much time can I buy myself when I pee in my leather Cheerio? Or do you think it'll spit it out right away? Thanks for all your help, G. Can you do that while driving? That's impressive. Huh. Dangerous. A hazard to others on the road. What if you kill a family? And they find you in that position? Worse yet. And that kills your family. of embarrassment or pride. It doth go. Pride goeth before the fall, Kendra. What's your QQQ position for the meeting? A joke. I just bought a bunch of out of the money calls and puts for fun. Worked out yesterday. Like a GME overshadowing my 2000% gains on my 0 DTEs at the end of the day. Where's the fastest place to find out if the rate is 0.25 or 0.5? Probably the candle. How will you hedge the DRS numbers? I don't need to. They're irrelevant. Did I miss something? RC bought more GME shares? When? What happens when the short thesis on GME is dead, but the stock doesn't MOASS? How's the short thesis dead? Because they had one positive EPS quarter? That's like me not shorting NVIDIA after their shit earnings. Crazy talk. I recently invested in a carpentry company. The plan is for it to make me a generational shelf. Ha! Stop trying to ghost my plays, Abe. Abe. I didn't say it was dead. The situation is hypothetical. I don't know. People write a bunch of DD to feed their copium. Quote unquote DD. And keep buy, holding, and DRSing, and rational people sell. What if at the end of all of the story, people realize that they bought into a video game retailer at, 7,000 times PE? Fuck. I mean, it happened, and this is the result thus far. It's pretty crazy, huh? Yeah. I'm not even short right now. I have no short positions on GME at all. GME's actual valuation is like $15 to $18. DFV bought it here at like $2. Ryan Cohen bought it here at like $5. And then everyone else bought it here at like 150 to 400 that wanted to be like DFV and Ryan Cohen. And I bought it 390 waves from the top. Go you, Askell. Don't worry, you guys can be the DFEs of Bobby. No, you can't. Don't listen to that guy. He's full of shit. So not at deep fucking value prices? No. See, what DFE paid was a cheap price for a lot of value. And then everyone that followed him paid a high price for less value. Why are Albany's gummy bears so good? You know, it's all the flavors, right? Don't feel bad. My initial cost basis on Jimmy was like $43 after February. So, I mean, my cost basis was significantly higher than theirs too. It takes time to get it down. It's going to be a while. Pull up a chair. Are you talking about those cycles written back in like the late 1800s, Innocent Ingrid? They're moderately accurate. I mean, the market, they're not completely accurate, but moderately so. Economies are cyclical. I miss J-Pow. He's like an abusive father that only shows up to take all my money a few times a month. I miss him too. I can't wait to see him today. 10 minutes till life or death. I'm scared. I mean, it's 30 minutes till Powell speaks. That's true. I'm just pointing out that it's not like I didn't do the same thing, but if you don't manage the position, you're just left underwater, right? I think that was more what I was getting at than anything else. I wasn't just trying to blindly insult people. Trying to bring about realization through insulting them. My initial buy was $35, and then I kept buying all the way up. Average was 120 before the split. Learning the hard way, like most retail investors. Well, hopefully it only takes the one lesson. 0.5 with nice talk. I think 0.5 with nice talk is better than 0.25 with mean talk, honestly. I do have a video for selling CCs on GME. Or, well, any stock. And then there's hundreds of clips about it too, but on the School of Stock channel. It's in the description, I think. For those about to get wrecked, we salute you. Dork, we're delta neutral. Nothing can wreck us. What console, not PC, have you used the most hours in your life? Probably like PS3. I only ever played one game on it, but I played that game a lot, so. Can't theta still wreck us if we're delta neutral? I don't know what you are. Are you delta neutral? I guess it could if you didn't buy enough of it. $4,000 BPS, but JPAL spits in my mouth. Or 2,525 BPS. Interesting. Get this, you buy low, sell high, and then now this is crazy, but you buy low again, and then you sell high. Oh, God. Yeah, that was a good video. I'm glad I got to immortalize that. Have rates coming at 0.25 and bearish conference? Do you think this will be the top of the cliff for NVIDIA? It's pretty close to Gamma Max. It doesn't tend to break it historically, although it can follow it up higher. Killer of calls. I'm back with the cigarettes and the milk from the Federal Reserve gift shop. Time for a paddling for the money printer in chief. I love that you get so excited for a wishy-washy speech from a boomer attorney talking about fiduciary responsibilities. JPOW is everyone's monetary policy daddy, okay? I'm pretty sure it's buy low, leverage up as it rises, hold everything once it turns around until all money is gone. If he doesn't come out with his guitar, that's bad, right? I mean, it might be worse if he comes out with his guitar, right? That'd be scary if he's gonna sing us a song. What if he sits down on stage and sings Jewel to J Fresh? Is J-Pow crying still on the table? You know, I'm not sure he gives a fuck. I know it's a bit wide, but how bad is a 331 SPY straddle? 390, 410. Missed out on Jimmy calls with work this week, so not a ton of profits to be throwing around. Congrats on your tendies, man. Well deserved. That's not a bad range. Straddles are a little, they perform a little better on SPY than, strangles perform a little better on SPY than straddles. And that's called a strangle, by the way. What's up, Alabia? I just want to say that this from the heart, all of you should be paper trading, and 75% of you are about to lose money. I'd laugh if it wasn't for the fact that one day Girk will leave, and then Wendy's will be overstaffed. Good luck, everyone. Thanks, Lawrence of Alabia. Wise words from an interesting bot. What if he comes out with Guybrush, like in that outfit? That'd be amazing. I don't even know what to buy. Calls, I guess. What if he comes out wearing Christine Lagarde's neck scarf? Her ascot? Oh, Jesus Christ. Puts. That means he's gonna do 0.5. She did 0.5. Or he's jealous. He's gonna do 0.75. I was born ready. J-Pow dressed as Prince, singing Purple Rain. You know I have a J-Pow Prince When Doves Cry stream card. I think I used it one time. I should have used it again today. Damn it. I need to somehow con Fluffy into making me a thread of all the stream cards I've already used. Correction, 1 minute and 30 seconds. Last speech before we go into Normandy. It would be awesome. 0.25 so my calls print, and then JPOW Killer of Dreams more hawkish than J-Hole to print my puts. That'd be cool. Ooh. VIX up, market up. 5, 4, 3, 2, 1. Recent indicators point to modest growth in spending and production. Job gains picked up in recent months and are running at a robust pace. The unemployment rate has remained low and inflation remains elevated. The U.S. banking system is sound and resilient. Recent developments are likely to result in tighter credit conditions for households and businesses to weigh on economic activity, hiring, and inflation. The extent of these effects is uncertain. The committee remains highly attentive to inflation risks. The committee seeks to achieve maximum employment and an inflation rate of 2% over the longer run. In support of these goals, the committee has decided to raise the target range for the federal funds rate to 3/4 to 5%. The committee will closely monitor incoming information and assess the implications for monetary policy. The committee anticipates that some additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Blah, 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 blah. 0.25. Okay, where's the economic conditions? Implementation note. Okay, I can't find the link for the economic conditions thing. Statement. Where the fuck is that? Ah, projection materials. Full GDP. Okay. Wait, what's this doing? Would Jimmy go up? No. Jimmy unfazed. Interesting. Ooh, looks like their inflation estimates are off again. Significantly exceeding March expectations. Unemployment rate estimates are fucking way off too. First voting 70% confidence in intervals would be 0.6 to 3.4% in the current year. Hold on, I'm trying to see if they raised. Target rate. Hmm. Okay. I don't think they have, unless I'm missing it. All right. Gmail not following SPX. Well, it's not in the SPY for the S&P 500. Sweet internalization. Upstart's doing really good. Implied volatility is up. Look at T-bonds. Ooh. I don't know if that just seems like volatility more than a loss of confidence in the bond market. Yeah, it just looks volatile. Hmm. Ooh, NVIDIA about to break Gamma Max. Yep, 0.25. Well, he hasn't spoken yet, and a lot of this is just near-term volatility. Although I did use some of it to sell a few of my calls off. I'll just get rid of these. Okay. Why is internalizing even a thing, for Christ's sake? To prevent volatility. It's doing its job. Yeah. Look at internalization doing exactly what it was built to do. They're not gonna just let GME gap the fucking order book up to like $30 when they could just stop it from trading. The storage volume today is liquidity reverting to mean. You know, it hasn't moved much since this morning, honestly. This like churn doesn't generate a lot of like freedom and liquidity, because as much as being covered is being shorted, right? Nvidia now worth more than Berkshire Hathaway by market cap. What is this world? Does this say that the bank situation is quite bad? No, he said the banks are healthy and stable. Which is why they're able to do 0.25, right? He also said that inflation was transitory. I didn't say he was right. I just said what he said. My 100C 421 NVIDIA puts looking kind of sad. Well, those are terrible. So it's understandable. T plus 35 from yesterday, today could be spicy. Yesterday and today? Not T35. T35 plus 3 plus 6. He speaks in 13 minutes. Sorry, 18 minutes. J-Pow and the Fed said inflation is transitory. Do you think they got it wrong with all their tools, or do you think they were intentionally lying to the people? I think they just got it wrong. But rate hikes back then would have been far more effective than rate hikes are now. Why would you get rid of your hedge before the event happens? J-Pow hasn't even opened his beautiful mouth yet, and you guys are bailing on your hedges? It's like you learned nothing. What's a hedge? Part of what I sold at 430. I have to go to lunch with my mom. You're such a good son. Is it like a business lunch? I also have to have lunch with Dork's mom. Watch your mouth. Hey, you're gonna be at meetings all day. Can you make sure the market doesn't get too volatile while I'm out? Whole port in UVXY at the moment. Oh, Jesus. Kenny is dead to me. uh, bullish pennant on the 15-minute on GME matter at all. Not if the market crashes. Did Kenny boof the entire NOPEX? We went up 50%, you greedy fuck. And it's not even the next T+2 yet. We're still up 37%. Stop whining. I'm perfectly safe, Hazy. Thanks for asking that. I did sell my NVIDIA calls yesterday, unfortunately, but what are you going to do? Yeah, we all know that the Fed raised by 25 points, man. When does Priapus speak? Calls are leverage, Notson. Honestly speaking, right now, we have a 0.25 rate increase. What do you think of something JPOW could say to make this a bearish conference? I mean, a 0.25 hike is already bearish. Inherently. Did you not see the banks begging all week for a pivot on CNBC, Fox, Bloomberg? Bill Ackerman. No, the market doesn't have to react in a bearish way, but it probably will. I can tell you that all the calls that went in the money on that run up then mostly sold off. Did you cut a few calls? Yeah. That was a nice spike. I still have plenty more, but yeah, I cut a few. This price action is like your crazy uncle with a skullet. Hold on, if we don't test 430 again, how accurate is my prediction? Interesting. Breaks coming on the SPY at 4017. The decision diamond. Well, I can delete these. No, allergies. Of course we're gonna watch his speech. Decision diamond. Have you seen Jimmy today? It's up. I know. If Jimmy takes a dive today from JPA's speech, there's plenty of theta left. What's the best percent of rise we can expect going into Friday? I mean, we're still above yesterday's gamma max right now. So there's still a significant amount of pressure on the market maker, right? We'll probably see more price realization tomorrow or the following day if we continue to maintain this price above gamma max. What kind of hands are needed to hold the decision diamond? Paper ones. Look up Kiss from a Rose by Seals on YouTube. It's the most, I've seen it. It's the most hilarious thing I've ever seen. I'd pay. Thanks for the knowledge. 0 DTE calls are the way. Nice, Jay West. Congrats, man. Who do you think will inherit Archegos bags after UBS blows up? Why is UBS gonna blow up? The bags aren't that big. You excited to trade sideways until April SLD? Yeah. The internalization is evident. Either we pop end of day or over the next 2 days. Probably a little bit towards the end of the day, right? Cetus is probably fucking packed to the brim. Who's going to inherit my bags when my port blows up? Why is your port gonna blow up? Why is everyone acting shocked when the exact thing that was expected to happen happened? That's a better question for all of you that are currently shocked. How many times did I need to say 0.25? I must have said 0.25 was the highest confidence, like 600 different times. I've been saying it since last week. Are you scared that the prediction was correct? Yeah, but you've been blessed with the expected. I'm shocked that it's not actually butter. Years of lies. Everyone was hoping for a pause. Well, that's stupid. Yeah, rates still up. Liquidity gonna go down more. More bank problems. It'll be fun to watch this pop out of the woodwork. Banks wanted a pause. Yeah, they did. So did you, Bipolar Bear. Are you short NVIDIA now? I mean, I've been short NVIDIA for a while. I'm gonna add more to my position once JPOW opens his sweet buttery lips and spills his words of wisdom and complacency all over me. JPOW said this is the last hike we run and more hikes to come. When we run, then Dumpy's big. I mean, the target rate is unchanged. I'm praying he says disinflation. Why? Because you've bought calls on things and no puts? Then we have this conversation before. Puts are like calls, but for when prices go down. Do you think Upstart can still run for OPEX at this point in time? Or is it time for CCs? I mean, we'll see what the market does. It clearly had a strong reaction to that initial rip. It's neither of those two, Edwin. What happens if JPOW says AI? Why would he? I'm sure one of the reporters will ask him about it. Like, have you guys considered using artificial intelligence to craft your monetary policy? And JPOW is going to be like, I don't even know how to use Excel. Protective put, same as long put? Yes. Except you own 100 shares of the underlying. Wait until people find out about poo calls and kaputs. Brains exploded. What's on Thursday? Rate increases aren't great for oil. Inflation's better, but Oxy is like a long play, right? They have a huge amount of coverage in like the Permian Basin, and will probably make a lot of money over time as the U.S. produces more and more of its own crude. You have a YouTube link for Powell? Oh yeah, I'm ready to go. Uh-oh. He looks determined and pissy. Was that 2 taps
Good
or
afternoon.
1? Oh, fuck. He's going to blow everything up.
Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole
Nice, Michael
to
Sop.
play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%.
But if GDP is only going to be up 0.4% on the year,
and wage growth
why is
has
SPX
shown
up
some signs of easing.
6%?
However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on
NVIDIA's up
wages and
100%.
prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year.
That's a long way to go.
Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes maybe, some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know.
Do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility.
Nick Timmeros of the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and the people who write the minutes will be very carefully counting, but I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SCP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And it, you know, in a way, the data in the first part, the first 5 weeks of the intermeeting period, pointed to stronger inflation and stronger labor market. So that pointed to higher rates. And then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To
Oh my
follow
God,
up, have you
everything's
considered at all
fucked.
whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
You know, we know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, you know, many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
Hi, Victoria Guida with Politico. I wanted to ask, you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly. That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision. I realized, you know, right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And so what we did was early Monday morning we sat down and said, let's do this, and he was obviously going to lead it in his capacity. So I don't, you know, my role was to announce it, and I get briefed on it, but I'm not involved in the work of it.
Hi, Chair Pell, Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes, I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But yeah, absolutely absolutely the same. The story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44% of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February, and we still don't have now, is a sign of progress in the non-housing services sector, and that is, you know, that's just something that will have to come through softening demand, and perhaps some softening in labor market conditions. We don't see that yet, and that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue, and we don't really see it yet. It's so people are making estimates. You know, people are publishing estimates, and it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real, and that argues for, you know, being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision. So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. So as for us, so for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here.
Profit on
How
calls?
did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week. So, but that will be up to him. So that's really where it is. The review is going to be thorough and transparent. It is clear to your last question. It's clear that we do need to strengthen supervision and regulation, and I assume that there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
And the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, they were on this issue, but nonetheless, this still happened. And so that's really the nature of the of the review, is to discover that.
Michael McKee from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's happening among the banks and asking, is there going to be some tightening of credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from from tighter credit conditions. So that we're looking at, and it's highly uncertain how long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Let's go to Rachel Siegel.
J-Pow's a nervous Nelly today.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, we're well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong, it is sound, it is resilient, it's well capitalized, and I really don't see that as at all analogous to this.
And one other question, would you be open to an independent investigation separate from the Fed's probe?
I welcome. It's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails, there are investigations, and of course, we welcome that.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And if I can follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
If you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic.
Nervously sweating, looks
and then
down
as
at
the
smudged
pandemic
Sharpie
programs,
notes on napkin. Don't crash the
rolled
markets.
off, spending actually came down. So
You may have
the
already
sort of
failed
fiscal
in that
impulse
objective.
Is actually not what's driving inflation right now. It was at the beginning, perhaps part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheet last week supporting that deposit guarantee?
Sure. So 13.3 seemed like the right. We have a little more flexibility under Section 13.3. We've done quite a lot
repositioning to
under
the upside?
discount window as well.
No.
We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be the right place. So with the FDIC, we're lending to the, in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you. Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end? Thank you.
Absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching what's happening with inflation and in the labor market. So we'll be watching all those things, and of course we will eventually get to tight enough policy to bring inflation down to 2%, we'll find ourselves at that place.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So people think of QE and QT in different ways, so let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Hi, Chair. Katerina Saraiva with Bloomberg News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as it is now on the public record, the supervisory team was apparently very much engaged with the bank repeatedly and was escalating, but nonetheless what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
I will have to come back to you on that. Yeah, I don't know.
Simon Urbanovich with The Economist. Thank you very much. Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors? Thanks.
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Go to Greg Robb.
Oh, he didn't want
Thank
to
you,
finish
Chair
that
Powell. Greg Robb
sentence.
from MarketWatch. I was wondering if you could give us a little bit more color. You gave just a little bit of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Nicole.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And there's really, we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
But I guess the question is, historically, it's hard to...
Mr. Mike, please.
Yes, sir. Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
Well, it depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be. And so, we're very focused on getting inflation down, because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation, and we had several of those, and they're very good for people. You see late in an expansion, you see low unemployment, you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try to get back to.
Jean.
Hi, Chair Powell. Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
It's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. The question will be how long this period is sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and we're certainly trying to find it.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. And I guess there were 6 of them. So.
And getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. What can we do to make sure? But again, that's not for me to answer today.
So you have specific thoughts on that?
Well, I see. If I did, I wouldn't share them because I really, this review's going on, and I want nothing other than us to find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. It just isn't appropriate. There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, to this work.
God, he's
not
over-explaining everything.
And under again, Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
This is the most nervous I've ever seen him.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
That is a lot of
So
blush.
we haven't really talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if credit were
okay.
to tighten enough, if that would prompt a rate cut.
So, financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. So we think that, though. So there are other measures which if they're focused on, bank lending conditions and things like that, they show some more tightening. The question for us, though,
She
is
put on her makeup in a
how
dark
significant
bathroom.
will that be, and how, what will be the extent of it, and what will be the duration of it, and then once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, so that's all I have to say. So, thank you very much.
Well, that was a lot. Fuck, I blew it. Yeah, you did. It's okay. I mean, he tried to make it a nothing burger while nervously over-explaining everything and highlighting the fact that the bank contagion is still widely and unknown. Rates were raised. I think that's the long and short of it. I don't think that the current Fed policy is achieving the goals that they want to achieve. obviously, or at the rate they're wanting to achieve them. JPOW just very unceremoniously declared that there will be no rate cuts this year, even though the market is pricing in 3 of them. I guess hoping that he folds to the contagion risk instead of addressing inflation. This is not bullish, but the bearishness of it may take time to be realized. I think markets are, you know, stable right now and at least confident in their stability, right? In the trading range that we are in, say between 38 and 4200. I think the market is going to react very strongly to data after that speech, especially PCE, PPI, CPI. Just due to the Fed's overall uncertainty, we're probably likely to see volatility pick up in the SPX, equities especially, over the next month. I think we'll see continued flight into the bond market, especially now that yields are even higher. NVIDIA tapped, I don't know if anyone noticed, tapped just above Gamma Max before its failure there. SPX tapped the higher range of its call interest before failing. So both of them have blown the majority of their call side gamma off of the chain. Obviously, we saw a big capitulation on the call side there with that speech. Now we may see some put capitulation here in the bottom range, right? Especially on SPX. I know I closed my nearer downside puts right there. So I'm out of my March 31 straddle, both the 4010s and the 3990 puts and the 4010 calls. Effect on GME, we still have T+2 to be realized. We had quite the pump yesterday, at least on the indexes, if not on GME itself. The carryover from that will probably be realized into the end of this week. I expect call positioning to start to break down over the next couple days. I don't think anything said there is going to breed a lot of confidence, and the market is going to and this is just an initial assessment, but I would say that the market is going to pull back, not necessarily price wise, but liquidity wise. I think we're going to start to see more fear, more uncertainty, very much like mid to late December, where, you know, there was still a lot of uncertainty surrounding the Fed's last decision for the year. Well, I guess mid-December. And obviously more liquidity flowing into bonds. So, you know, I think a slow breakdown over time in any bullishness here, and then violent and volatile reactions to incoming data points. And probably more data points than we've been looking at prior to this. I think reactions to CPI, PPI, PCE, those are going to be more pronounced. But also reactions to unemployment data are going to start, because the Fed is really starting to push the labor narrative, and they need to. Right, you can't have price stability without. They'll never achieve it without affecting the labor markets, and that, even if that means that they have to move the terminal rate up and increase rate hikes into the end of the year, they will achieve, if nothing else. I think more importantly than achieving 2% inflation, the Fed is targeting, you know, 4.7 to 5% unemployment, maybe higher. Generally, once unemployment starts moving that way, it starts to move that way very, very quickly. It's slow to get off the ground, but once it gets some momentum, it can really take off. I mean, historically, if you look at unemployment rate increases in periods approaching recession, which we're definitely headed for, you know, it's very slow, volatile data set, kind of just chopping a lot around a fixed point, and then it'll start to move, and then the momentum of that move increases exponentially until something is done to halt it. Usually, historically, or at least over the last 2 decades, in the form of QE, that, you know, reinvigorates the labor market. If we hit a hard enough recession for a long enough period of time, that may come through government stimulus instead. But yeah, I think that's where we're at. Still a lot of positioning in this range. I think market's going to be mostly choppy into the end of the day. There's a little bit of positioning in the 40-50 range. I don't know if we'll see that high. We could. The collar's still in place. And then there's, you know, puts closing out under 4,000 and at 4,000. So that can stimulate upside. But I think ultimately, over the rest of this week, we're going to see a breakdown in the longer dated call side positioning on SPX and futures. Also, futures are going to have to price in the Fed's determination to continue holding to the target rate once it's maintained, and stop pricing in pullbacks into the end of the year. And that is going to have a probably more significant and dramatic effect on index pricing over the next 3 weeks or so. Was my speech better than Powell's? Yeah, it fucking was. Time to make white now. Time for probably a lot of chop, but neutral indexes can be good for GME. So I think GME still has some potential. Upstart, not so much, right? Obviously, another rate increase isn't beneficial to them over the next month or two. So maybe and with their liquidity still driving down, I'm really not confident in a run on Upstart, and the Fed statements kind of sealed the deal for me. So I sold some CCs on it at 17. I feel like that's sufficiently far out of the money that if it does have a little run, I don't have to worry about assignment. I sold them about 30 days out. GME, I think, is still very much primed. I think the fact that we've maintained a price above gamma maximum from yesterday's close into the end of today is a strong position to be starting from, and I think there's still potential for GME into the end of the week. Obviously, there's some opportunity to reposition there, if nothing else. I picked up some NVIDIA puts on the test of gamma maximum. I have not fully averaged down my puts yet, as NVIDIA IV is a little bit elevated right now, and I think some chop in the 260, maybe 250 ranges. Well, probably 260, a low 260 range is possible for a few more days before we really see any significant downside. So nightly straddles with long pit positioning. Probably, I'm going to continue with my plan of straddling, especially if volatility begins to increase. I might move into a strategy of selling more short strangles. I think we don't have a significant amount of data left this week. I know we have some jobless stuff tomorrow and some new home sales, Fed national activity. That's not really going to have big impacts anywhere. Probably stay around here. We can see some upside in the coming weeks, but as long as there's no severe drop, we still have potential for OPEC, similar to March or May, still could hop over 30. Yeah, I think OPEC still has a chance to continue running. I don't think OPEC is killed by this, which is, you know, probably a positive for most of the people here. I don't see, I mean, outside of durable goods on Friday and maybe some extra weight added to PMI same day, I don't think a lot of what we see come in this week is going to have a big macroeconomic impact. We may be entering a period where we're a little more sensitive to foreign conditions and political conditions. The market, in periods like this, the market tends to start seeking confirmation, and whether it's confirming bias or, you know, actual confirmation of a trend, it's going to aggressively position for that, right? So the more uncertainty you have, the more positioning will surround a greater range of data sets. $76 million volume. You think there's more in the tank? Very well could be. A lot of today's upside potential internalized, right? Those orders are going to have to hit the tape eventually, even if it's not today, right? You notice he completely dodged the question on the health of the non-bank financial institutions. Well, I mean, they don't have as many disclosures, right? He probably wouldn't know, and I mean, he has some insight into that, but he's not a regulatory body, right? He's definitely not an SRO who would be far more privy to that information. Theoretically, they would be less exposed, right? Like broker dealers and hedge funds would be less exposed to that same contagion risk than banks would be. Their positioning tends to be far more flexible and far better hedged than a bank's would. Also, they're custodial owners of deposits, right? They're not reinvestors of depositors, right? So you deposit your money in a bank, they go out and they buy, you know, securities and treasuries and things like that with your money, and then, you know, when you need money, they provide it to you. If you have your money in a broker, ironically, regardless of, you know, the thing Superstock says, if you have your money in a broker, they're simply holding it in a custodial fashion. They're not reinvesting your money. You invest your money, right? And so your money, your deposits should always be on hand at a broker. Given the banking system $2 trillion in guarantees is definitely going to get them to tighten credit, right? Well, we'll see about that. It's still a conditional facility, right? Like you still have to meet conditions to qualify. And then even if you do qualify, you know, you're only passing the buck off for a year, right? And you know, provided that they are disclosing the participants of that facility, I mean, I don't see how it negates any of the obviousness of the risk they're carrying. So it seems moderately transparent. It's a net benefit for the Fed. I mean, me and you have had the argument a bunch. But I mean, he can go ahead with rate hikes. He can go ahead with his hawkish stance, right? Because he's backstopped the banks, and no one can really stop him. OPEC's obligations on GM are already done for looking at the volume. I mean, we've had a lot of volume today, but that doesn't mean that OPEC's obligations are completed. I would say based on simply the arbitrage this morning and the fact that no real liquidity has been realized today, that OPEX is likely to continue. Completely out of everything, I would be very careful betting on that assumption, but I mean, the data doesn't show a reversal in the trend yet. Completely out of everything, made 198% blended. Thanks as always, my brother. When looking to re-enter, do you think July is too far? I'd be careful with far-dated positioning after hearing that. I think maybe more of a focus. You know, I think this is one of the times when traders benefit the most in a market, is when uncertainty is high, and you can trade trends, and trends will persist through, you know, data sets and then fail. Choppy markets are a trader's dream. Obviously, they're not, you know, a swing trader's dream, but I think there'll be plenty of opportunities. I do think they'll be a bit different, though. Obviously, the range I highlighted on the SPX chart that's in the daily for the 25 BPS, that remains. But I think that's very possible we visit both the top and bottom of that range as we move towards Q1 earnings. And then Q1 earnings are obviously a large impact event, right? That whole period of S&P earnings and you know, the big mega cap earnings, those will all have a significant effect on how like the market PE, right? Is there no other risk of another Archegos? I mean, they changed a lot of the like reporting requirements and the allowable margin for family offices after that happened. So, I mean, of course, there's always a risk for something like that to happen again, but it'll have to happen in a slightly different way. And a lot of it was, you know, their counterparty's fault for not, you know, paying closer attention. I'm just gobsmacked that he admitted that board members are assuming credit tightening in their projections. That was the craziest thing to me. That was pretty nuts. I mean, I think they'll quickly find out that credit doesn't tighten. Credit will simply be loaned out at a higher rate, right? Banks will chase their profitability till they die, till they can't. So yeah, I mean, I think they're aware of that though. With how much price action we've seen on Jimmy today, no doubt we pull back in after hours or tomorrow, right? I don't think we've seen that much price action on GME today. I think there's a possibility that today is the pullback period. I mean, I would say internalization is high. I wouldn't be surprised to see our dark pool index rise pretty significantly. I don't think we've seen any effective change to the borrow rate. Am I wrong? Has borrow rate remained relatively stable? I would expect it to have. So I don't think we're seeing a resolution. It's kind of like we've partially OPEXed and we've frozen here for the day, right? There still needs to be a realization of the rest of that liquidity. Now it's possible that long vol wasn't set up to handle an OPEX, that we were careening into a NOPEX period, and you know, this move has forced them into a position where they may have to handle that. I mean, the move is sufficient, obviously, to bring to light those obligations. So full port 30C 2DTE. I mean, I wouldn't do that, but it's a thing. Obviously, for most of any re-entry into GME, even if I miss an entry opportunity, I'm going to be waiting for the data tonight, right? I'm going to be waiting for the OI data after today. I'm going to be looking at liquidity and after hours. So we could be seeing Freg's Day revisited tomorrow. I would be cautious of an upside move, a strong one. Yeah. Some of the falling market can aid in their search for liquidity. Because obviously, you know, the active fund sell-off provides some near-term liquidity. So they're basing their projections on a projection of what might be a tightening of the credit market because maybe that will be the effect. Did I get that right? Kind of. Well, I mean, at least Powell was honest. They really fucking don't know. And that's probably the most dangerous thing he said. Because up until this point, their transparency has given them a significant amount of leverage over market sentiment, right? Uncertainty is almost always fear. Yes, Mr. Flags. And fear and lower prices are highly correlated. Also, fear compounds, right? So if you're a little scared and prices fall, now you're a little more scared. And then prices might fall more, and now you're really scared. And then prices fall a lot, and you have, you know, mass panic. And so, and that can, and that's why they moved to address the banking crisis so quickly, because that can spiral out of control far faster than they can get in front of it. And they were quick. That was, I mean, the turnaround time on that, like I said, it was 12 days. It's very impressive. But I don't think it'll be enough. I think once that seed of doubt is planted, it does nothing but grow. It's GME's CVVWAP. It's a measure of the variance and arbitrage across GME and then GME on NYSE and GME on the foreign markets it trades in. The more arbitrage variance there is, the more likely there is to be a significant move in the other direction as that arbitrage is realized, right? Arbitrage opportunities in an efficient market should always be realized, and GME is an inefficient market. So when arbitrage is realized, the extent of that realization can be extremely violent. That is the first time on the 4-hour chart that GME has crossed over the second standard deviation from mean since January of 2021. So whatever you know, the obligations that occurred into aftermarket last night have created a significant problem in the arbitrage market for GME, right? And so the resolution of that will likely be as violent or more violent. Does that make sense? And it's I know it's not an easy concept to get, so if I need to kind of break it down more, I can. Now that doesn't necessarily have to be a positive. I mean, it's kind of agnostic in its directionality. But generally, large spikes in arbitrage like that lead to large moves in volatility, right? And in GME, since GME is a volatility short target, volatility does the opposite of what it's supposed to do, right? Because all the shorts are counter positioned against volatility, and the big fucking waving left side tail is always omnipresent. The collapse of that tail leads to, generally speaking, price improvement. So normally volatility would be inverse price, and then with GME or other volatility shorts, volatility can be positively correlated with price. It doesn't mean it will happen. It's just something of note. Is that an indicator? Yeah. Sort of. You have to customize it, which is kind of a bitch. Well, as of this morning, GME was overpriced relative to foreign markets. The drop in price in GME this morning was, you know, stabilized arbitrage. But generally, you know, that because of the illiquidity, it's impossible to stabilize. So when you put a lot of pressure on liquidity like that, right, and kind of like what I talked about in the River Runs Dry DD, you know, the more illiquid the environment becomes, the more volatile and more voluminous, right? So less liquidity, more volume. And we're seeing the effect of the more volume today, right? This is all, a lot of this is all, you know, options churn and probably continued resolution of that arbitrage, right? And then when that's done, you know, then the liquidity continues to revert to mean, which means that the liquidity still needs to come back. Otherwise, there's no liquidity to improve the efficiency of the market. What about Fubo? What's it doing? It's trading at $1.18. What time frame does that happen within? Usually pretty rapidly. Greg said the seed of doubt. Pickle man? So picking up NVIDIA while it's at 270 here now is a good idea, right? You're gonna buy it? I feel like NVIDIA is kind of like a rope bridge and they didn't measure the ropes. So basically, on today's overall market outlook and Jimmy's price realization, are you looking for further repositioning for the coming days or holding your current call position? I'll probably reposition more as I get more data tonight. So if you know the data tonight on GME breeds some confidence, I'll probably enter some more positioning tomorrow. Right now, I just have like a little position in place to, you know, in case Jimmy just runs off the hook because it is volatile, right? As far as market positioning, I exited both of my straddles. I have no calls left. I have a couple puts, not many, like 10 puts at like 38.50. Those have some theta on them. I'm not sure if I'm going to move those just yet. I'll probably want to see how positioning shakes out there. And I entered some more puts on NVIDIA on its test of Gamma Max. Made more than $3 on SPX options. Thank you. I hope you closed your Zom calls yesterday and are ready to straddle strangle like a college girl in a cowboy bar. I might be ready to short strangle some shit as we chop into relevant economic data. Thanks for being here at the end of the financial system with me and all these bots. You're welcome, man. Pretty fucking glad I got out of my position early on that piece of shit Violent Sideways. Can you give me a quick recap of JPow's seance of the market? Or am I gonna have to rewind? Oh man, you gotta rewind. I just did like a whole 20 goddamn minutes of talk. I spoke longer than JPow did. Are you taking nearer the money NVIDIA puts or out of the money? I bought some Aprils nearer the money. 250, 240. I bought some Mays, 200. Averaged down a couple of my May 150s, so I don't have a lot of confidence in those. September, I picked up some 150s, 120s. January, I picked up some 120s and 100s. Just a few. I've only of the capital that I got from calls over the last couple of days on NVIDIA, I've only deployed about 25% of it. I have yet to deploy the rest. I'm gonna wait because obviously it hasn't crossed Gamma Max in a significant way, and if Gamma Max continues to move up, there may be more put entry opportunities. No, I was in a meeting with JPow. Please recap. Nope. That was without a doubt the most dismal, unhopeful FOMC speech we've ever heard, yet the market still elevated. I mean, down, technically. The rug is coming soon. Yeah, people aren't going to like that one. I thought Jimmy would be much lower by his point. By this point. This looks promising for T2. Yes, it does. I just said that like 5 times. Do you think J-Powell had a clandestine rendezvous with Lagarde before FOMC? No. He wouldn't have been so nervous. Not but all like Bruce Buffer E. And in this corner, Gherk, the seed of doubt. Pickly. I don't know what the fuck you're saying, Surface Smurf. Just send me more market data on the housing. If they priced in 3 rate cuts... Won't that mean ouchie downtowns? Yeah. You missed it, Cornichon. Welcome aboard, person. I'm sorry.
Cornichon.
I mean, it's what they are, right? We're all thinking it. I just said it. Is there anything that could be in the 10K that could ignite GME more? I don't know. Possibly? Probably not. Recax is now a thing. Yes, it is. New stream card idea? 100% DRS? Nah. Who cares? You mentioned perhaps not taking too long of a bearish stance for now. Will you be eyeing 30, 45 DT SPX spy plays? I might even be nearer the money than that in shorter term. At least for now, till I have some confidence and direction. Well, we let's see where institutions put their money, right? And then we can, you know, make better determinations from there. So we'll follow the money as we usually do, and we'll come up with a plan. But for now, a little standoffish. All right, so based on what you said, SPX is going to do ups and downs, but more downs, except when ups with the occasional down. Oh, I think you've yep, that's how I would describe uncertainty. I think that the price range that I indicated here on my SPX chart, after eliminating the 2 other possibilities, is a very good trading range for us to explore, and we are already seeing the downside of the lower predicted range. God, I'm fucking good at this. Holy shit. Like, literally just right up into the peak and then the failure. Maybe I'm a wizard. But I do think that an increasing volatility range over time could be experienced as we have more economic data come in. I mean, look at that shit, right? Like, when I missed the wick. And then this. Look at this. Right down into my target range. If we close at 39.65, I'm gonna shit my pants. I'm gonna start buying lottery tickets. I probably won't. No, I probably won't shit my pants. I'll gloat, though. I'm gonna gloat harder than I'm gloating right now, which is already pretty impressive. What happened with your QQQ? I have no idea. Still worthless. What's QQQ trading at? Yeah, it needs to drop $8 more before the end of the day. So it's pretty unlikely that those are going to ever be worth anything. I do have 10 minutes. It's been a speculative week. I feel like I've nailed everything. IWM, NVIDIA calls on Monday morning, the GME run, the SPX drop into the end of the day today after the Fed meeting. I even sold my Upstart calls on the bounce. Yeah, I don't think I sold CCs on Upstart already. I really don't have a lot of confidence in its potential for any upside right now. That's not true. I thought they were going to have positive free cash flow again, too. I did not think they would hit EPS. But to be fair, you didn't think they were going to hit EPS either. You did miss on GME being profitable, I think. Well, no, I said they would have positive free cash flow. I didn't think they would have positive EPS. I did miss on that. I missed on the positive EPS. Actually, the revenue improvement was impressive as well. I'm gonna need you to extend that red rectangle down to like 3,200. That's not the way we play this game. How do we see your predictions? Well, here, and then I write about them once a week on the members Discord. Thanks mainly to your guidance, my GME gains looked like I was trading SPX with a third of my position still open. Nice, man. Congratulations. QQQ NVIDIA screen. It's the same shit. What's the difference? Same index. QQQ. Also QQQ. Wait. Also QQQ. NVIDIA? Maybe they're all just NVIDIA. QQQ is the NVIDIA one. All same like each other. Any thoughts on 16 million volume with no price improvement? Yeah, lots of options churn and internalization. Jimmy's holding 24 and the market's rocketing down. You planning on jumping in Jimmy puts after potential realization? I mean, I'll buy protective puts. I usually do. Well, I mean, the fact that Jimmy is showing resilience to the drop in indices is, I mean, it's bullish, but don't forget that any positive internalization today is now being offloaded into, active fund sell-offs. So it's not the most bullish thing in the world, but it's good that it's stable, because if the market recovers tomorrow, then Jimmy could recover positively with the rest of the market. The gamma flip point on NVIDIA? Oh, it's like, what was it at? Gamma neutral's at 234.05. Here's your price stability. End of day crash. I mean, probably a bit of a sell-off here. Volume on futures isn't too crazy. It's decently strong. VIX is getting a little more elevated here, moving up to 22. What do you think spot SPX ends today? See if we find resistance at 39.80. Nope, futures blew right through that. 39.70, 39.60, 275 on futures. They're still kind of far apart. I'm not sure where that'll be on SPX. Maybe 39.20. That seems excessive. Maybe we just find support here. Futures at 39. Okay, futures are finding a little support at 39.80. They caught a bid. That should be so around 39.50. Maybe. I mean, we've only got 4 minutes till close, so I think some of the sell-off's uncertainty too. This won't necessarily persist. Yeah, you can't panic sell straddles. You have to kind of hold them till the realization occurs. MSTR getting absolutely wrecked today. I know. Hear me out. SPX crashes to 3,500 tomorrow. I'd be okay with that. We're doomed. Man, you really flipped the script quickly. Close CCs today. Hopefully we run more now tomorrow. We'll see. I think it's very good that GME is about to close the day up 35% from the previous close. I think that's relevant. Quite the move in GME market cap, right? Well, there can be a continuation of this, which we know. T+2 tomorrow, or does it make it Friday? I mean, it depends on where the obligations settled from the market maker. We might see it tomorrow. We might not see it till Friday. Generally speaking, I would say tomorrow's more likely. They don't usually like to run GME on Fridays because the 0DT pile on can be insane. I don't like the put options volume on GME. It's way higher than existing OI and scattered throughout a lot of strikes like it was in August. Yeah, I'm not. I mean, I'm only seeing a little bit of the OI right now, but like I said, I'll wait to see the information tonight. NW, thank you. Thank you so much, man. Congratulations, by the way. If we don't see price improvement tomorrow or Friday, does that mean we trade flat for a while? Well, if we start to see a reversion in liquidity, which we haven't yet, but if we do, that could mean more downside. And but we'll wait. I mean, you got to be patient. The liquidity indicators don't move that quickly, you know. They're not in real time, and so you have to kind of plan ahead. Nvidia put up 50%. Nice. Good job, man. Like retest 380 over the next few weeks. Yeah, I don't think that's outside of the range of possibility. I mean, we also have to see how positioning, like we don't know how positioning is going to react to the Fed statements. Right now, it's really fucking bearish, right? We've been doing nothing but go straight down for a little bit now. Like the last like hour and a half is almost just straight down. Ding ding. The day is done. Hopefully that's where we'll find some stability in the sell-off for now. Although I wouldn't mind NVIDIA just going to the bottom of the earth. So yeah, I think the last like 30 minutes of explaining everything is more than sufficient for the daily wrap up. Thank you guys so much for tuning in. I will post any information on GME as it becomes available in the Discord tonight in the announcements channel. I appreciate you guys all hanging out. I hope everyone made a lot of money, at least this morning. And be careful with it. Things are getting sketchy. Thank you guys. Have a great night, everyone. See ya.